power or same performance at a lower power.
Jensen looks at the energy component through the lens of Blackwell's greater efficiency. How do you look at the energy component of accelerated computing?
We certainly are very constructive on the energy efficiency of the future of compute, but we also are constructive on the physical infrastructure aspect of it when we look at how the data centers will be powered, and so much greenfield power is actually needed. So we're quite constructive on the physical infrastructure of it. In fact, if you take a step back and think about the digital infrastructure has actually leapfrogged the physical infrastructure of many developed nations, and we find many interesting plays there as well.
Lei, how do you balance all of this? The chaos around NVIDIA earnings, a single name, all of the central banks speak, and all of the economic data in 1 week. What was that like for you and all the things crossing your desk?
Well, that's the excitement about being an innovation investor. We focus on the secular story, the stories that's going to drive stocks, fundamentals, regardless of what central bank will do. So we always go back to, in 2008, iPhone still sold. So irrespective of economic cycle, when we focus on fundamentals, that's what active investment is about. We find stories that will grow irrespective of cyclical backdrop.
So if you're looking active at the moment, and you see the run-up in valuation of certain companies that we've all become completely euphoric around, how do you broaden that out? You said look at the supply side. Am I automatically thinking, okay, go global here, look at a TSMC, look at some of the Japanese suppliers that feed into an NVIDIA? How are you looking at the broader wealth of opportunities that are outside just certain big Mag 7 names?
We go back to the fundamentals. We're active investors. So we look at each company with respect to its own growth opportunity. Obviously, at a high level, we are thematic investors. We look at how big the secular trend is. Then we look at the demand-supply imbalance and the longevity of it. And then we do look at it at a global level and find who are the future winners and losers. Again, go back to, it is a time of change, a time of inflection. And when time of inflection, sometimes we will find the market will underestimate some of the growth opportunities of different parts of the supply chain. And that's what we focus on. One stock at a time, and how strong the growth momentum is, and more importantly, are they going to get majority of the future profit pool? How the industry is being reshaped, that's what we focus on.
You talk about this highway, and everyone is really focused on the infrastructure play, but everyone's trying to work out, particularly the VC community, where the value is in the applications. You talked about healthcare, about advertising already adopting generative AI, but where are some of those long-term opportunities? Where's being undervalued and underappreciated, and where can adopt generative AI?
So at a high level, I would say we're still early. And being an innovation investor, sometimes it does require a touch of imagination, if you will, because the future has yet to come. The future is the best part of it. But I would also point to, we are already seeing, this time is a little bit different. So if you look back the past 15 years, it's about the consumer electronics. You're seeing the killer app. We call them the killer apps simply because we can touch and feel. But that said, this one is about the infrastructure upgrade. So it's less obvious, but that doesn't mean the opportunity is not as big. When we look forward, we can see the digital manufacturing. When we think about the reshoring, how much we're going to need on the automation side, and then also the future of robotics. Those are some of the areas that we think we're going to see a lot of great opportunities ahead.
Love having you on to talk us all through your thesis. Lei Chu, Chief Investment Officer of Thematic and Innovation Equities over at AllianceBernstein. Really thoughtful conversation. Meanwhile, coming up, a clash between Brazil and Elon Musk. It's heating up as the country threatens to block X within the next 24 hours. That conversation is still ahead. What are you watching, Ed?
Earnings still happening. There are other names, and one of them is Dell. And Dell is a part of the AI story. It assembles the servers that go into data centers, adds other components, and that helped it with its earnings report in the quarter, gone up 1.4%, which we'll get more on later in the program. This is Bloomberg Technology.
most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against 80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
A win for Elon Musk. There's been a dismissal of a lawsuit claiming he pumped up the price of the Dogecoin into a $258 billion, quote, pyramid scheme. Investors who lost thousands of dollars investing in the coin blamed Musk for promoting Doge or Doge to millions of followers on X. A New York federal judge dismissed the claims, finding that Musk's statements were, quote, aspirational rather than factual and susceptible to being falsified, and no reasonable investor could rely upon them. Meanwhile, a clash in Brazil for Elon Musk. The country's top court justice is taking on Musk's companies as he vows to shut down X and blocked Starlink's bank accounts in Latin America's largest economy. Elon calling the Supreme Court justice an outright criminal of the worst kind. Bloomberg's Kurt Wagner has the job of joining us and explaining what is going on. Let's start there. Kurt, what is going on?
Yeah, so this has been ongoing for a while now. This judge, as you mentioned, Ed, has been trying to get X to take action against certain accounts on the platform, right-wing accounts, misinformation, things like that. Elon, as you know, a self-proclaimed free speech absolutist, is saying, hey, we're not going to do that. We're not going to remove these accounts or adhere to your demands. As a result, he, a few weeks ago, even shut X's operations in the country. Now the judge is saying, well, you need at least a legal representative here in the country in order to operate, and if you don't appoint one, we will remove the app entirely. It sounds like X is not going to appoint someone, so now we're in a bit of a standoff here waiting to see, is this judge really going to follow through and ban X in Brazil?
And this is where Elon Musk's conglomerate of companies suddenly comes to bite him, because this judge isn't taking action just at X alone.
That's right. I mean, this is the universe, the Elon Inc. universe, right? And to get to X, the judge is going through Starlink, which is, Elon's one of Elon's other businesses. And so freezing bank accounts there in order to take money for fines that X owes, right? And so to your point, Caroline, this is a great example of where running 6 different companies, especially in countries where there are adversarial relationships, can really be a detriment to him. And this was something that when Elon first bought X was a real concern. Would there be governments across the world that would apply pressure on Tesla or Starlink or something else, XAI, in order to get to the speech-related issues that happen on X? And we're actually seeing that play out here in Brazil.
Kurt, I know this seems like a very simple, basic question, but what is X's footprint in the country of Brazil? Like, do they have a big office with hundreds of people working there? What are we talking about operationally?
Yeah. Operationally, I believe it was somewhat small compared to a lot of, certainly where they operate in other countries like in the US or even in Japan. I think from a user-based perspective, we don't know exactly. I've seen estimates between 20 million and 40 million active users there. My understanding is it's around the third largest market for them from a user base behind the United States and Japan. So, significant for sure. Brazil is a country where, people are very active online, very active on social media. WhatsApp is huge there. Instagram is huge there. X is huge there. So this is a significant issue for them. I don't know if that usage necessarily translates to a huge revenue driver for the company, but regardless, the optics, and taking a country of such importance and significance in the world, but certainly in Latin America, off of X entirely is a big deal if this ends up happening.
Now, we're used to Elon Musk firing out on his own platform, but he's got some fighting talk for this Supreme Court justice, in particular saying that ultimately he is an outright criminal of the worst kind, masquerading as a judge. What sort of implications is this going to have for Elon Musk to say that sort of thing?
Well, it's hard to imagine this bridge being rebuilt at any point in the near future, right? I mean, he's sort of going scorched earth here on this judge. I believe he also posted an image that was created by Grok, his AI bot that showed, the judge behind bars, basically saying you're going to jail, right? I think, when you have someone like Elon who's known to lash out at his competitors, who has almost 200 million followers on X, I mean, these are serious, attacks, right? And we'll see what's going to happen, but I think the bridge there is burnt quite aggressively.
Kurt Wagner, we appreciate it. Thank you. Plenty more. We're going to be thinking about Alibaba next. Stay tuned. This is Bloomberg Technology.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build. So it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
It's just because we're behind the scenes, but it's big. With $1 trillion of assets almost, we're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Time now for Talking Tech. First up, Alibaba has won the endorsement of China's antitrust watchdog more than 3 years after a probe into alleged monopolistic behavior. Now, the State Administration for Market Regulation saying the company has ceased the anti-competitive practices. You look at the share reaction. The move suggests that Beijing is actually keen to signal support for the country's internet sector. Plus, Chinese EV makers feeling the impact of EU tariffs. Now, Chinese brands accounted for 9.9% of EV registrations in Europe in July. That's down from 10.2% in July of 2023. It's all according to the researcher Dataforce. Automakers have been scrambling to adjust to the introduction of new tariffs on July 5th that raised duties on Chinese-made EVs to as high as 48%. Meanwhile, Uber planning to expand its South Korean business and step up its fight with domestic rival Kakao, which has more than 90% of the country's market. Now, Uber CEO Dara Khosrowshahi is making his first official business trip to the Asian nation, saying the company is making headway in the region as rides jumped almost 8% in the first half of 2024. Ed.
Okay, coming up, NVIDIA in talks about joining in that OpenAI funding round along with Apple and Microsoft. It's like transfer deadline day for AI companies raising money. We will have the details. This is Bloomberg Technology.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that it travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
Billionaire Gautam Adani founded one of India's biggest and most controversial business groups. After being rocked by accusations from short seller Hindenburg Research last year, Adani is now preparing for the company's future in a real-life succession story. Meet the family members he's handpicked to take over the business as we deep dive into the facts and rumors surrounding the Adani Group. Inside Adani, a Bloomberg exclusive replays all weekend, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
NVIDIA, now one of the world's most valuable companies, emerged from an industry often misunderstood: gaming.
This is the Xbox.
The public witnessed the first major triumph when, in 2001, Microsoft's then CEO Bill Gates decloaked his company's inaugural competitor in the console gaming battlefield. It was a vital stepping stone that aligned NVIDIA hardware with PCs bought by hardcore gamers keen on upgrading their computers' components, something they couldn't do with consoles.
But something else happened during those 20 or so years. People started to ask, if these things are so good at transforming code into people and vehicles, could it work the other way around?
GPUs excel at something called parallel computing, taking a complex problem, dividing it up into small sets of calculations, and solving them in parallel very quickly.
A lot of the time, you see that there are runs on these graphics cards because they have a lot of applications even outside of gaming.
More recently, companies acquire GPUs en masse for use with artificial intelligence. OpenAI's ChatGPT, for instance, uses NVIDIA hardware. NVIDIA became the leader it is today by advancing technology designed for games but valuable to disparate industries. It knew far in advance that to succeed, it needed gamers.
Bloomberg Original is taking a look back at how NVIDIA gained dominance in the AI industry. Check out the full version, 9 minutes, YouTube, Bloomberg.com. It's pretty astonishing. Let's have a little think about what shares of NVIDIA have been doing this in its fiscal second quarter week. 5 days, we are down by around 8%, 9%. This is actually the biggest weekly decline going back to April. That's the kind of response we had. We've talked about, Caro, how the bar was so high. A stock that was up 150% year to date, almost 1,000% from its October 2022 bear market low. I don't think I've experienced a week like this in the context of one single name's earnings, but it's been a ride, let's just say that.
$300 billion almost wiped off in terms of market capitalization, but still got some cash to splash. And in fact, sources telling Bloomberg that NVIDIA is in talks, Ed, to join a funding round for OpenAI that would value the AI startup at more than $100 billion. Apple also in discussions about participating, joining Microsoft and Thrive Capital, who've already been backers of this company. Let's get right to it. Bloomberg's Mark Gurman has been reporting this out with people like Ed and others. Why would NVIDIA want to take a strategic stake in OpenAI?
Well, it's so interesting. So it's NVIDIA, Microsoft, and Apple, the three most valuable technology companies in the world. And they all happen to have a vested interest in the success of OpenAI. The reason NVIDIA has been so successful over the past 2 years and change is because it's selling a ton of its accelerators and other components like the GPUs mentioned in that original to companies like OpenAI and others that are powering features on the cloud like ChatGPT, Alexa, and other types of AI services, right? And Apple obviously is integrating ChatGPT into iOS 18 later this year. And Microsoft's almost entire AI strategy is heavily reliant on OpenAI. And so they all have a lot of vested interest in their success. They know that OpenAI is important to their products of today. And it's also possible, like in the case of Apple, that it may be even more critical and get expanded over the next couple of years into their ecosystems, right? And so not only do they have a vested interest, they want some skin in the game. They want to be there at the table. And to do that, you have to put in $100 million plus.
It's not straightforward, and my understanding is, I mean, look, $100 million is a drop in the ocean for NVIDIA, but my understanding is that they kind of want to know what's going on, right? You get almost a seat at the table. I'm not suggesting a board seat or anything like that, but at least they would know what's going on, broadly speaking. It's completely different to Apple. Like, the Apple side of this for me is the bigger bit. What's your understanding of Apple's motivations to be on the cap table of OpenAI, Mark?
Well, Apple wanted a board observer seat, right? They wanted to literally be at the table. They wanted the same access that Microsoft had, despite a lot less of a deep partnership and a lot less money invested. For various reasons, OpenAI pulled out of that board observer situation with both Microsoft and Apple last month, actually in July, right after agreeing to the Apple board observer seat. So that fell apart. The next best way to be involved and have a seat at that figurative table is to sort of join the cap table and be an investor here. ChatGPT is important to the new version of the iPhone and iOS, given that's going to be an option as part of the new AI services on the phone. But over time, you know, Apple's internal AI strategy, I would say, is kind of weak. And at some point, if they don't get up to snuff, they're going to have to make a decision to really partner with some sort of deep generative AI integration. And there is no better partner at this point than OpenAI. And so by making an investment, by helping out OpenAI, by being involved, they give themselves options for the future, but also have a better understanding of what's going on there for a current partner.
But Mark, once again, it's integral large language model makers and the same big tech companies. We saw it with Anthropic, you're getting it with an OpenAI. Regulators can't like this.
Yeah, I'm sure they don't like it. But there's, I guess, at this point, the only thing they can do is try to stop it. We've not seen any evidence that they're going to try to pull apart these investments in OpenAI from Apple, NVIDIA, and Microsoft. It's unclear if OpenAI is blocking investments from other types of companies, so we have to really see how open this is. And I think regulators are probably going to wait and see what the final numbers are. Again, this is all fluid. Nothing is finalized here. There's a possibility that Apple, Microsoft, and NVIDIA are not part of this. I would say that is extraordinarily unlikely. But I think we're a couple weeks too early for regulators to start creating problems for these investments. But if they do go through, you can be certain they will.
Yeah, I don't think this is the end of the story, but we're certainly all across it. Bloomberg's Mark Gurman, thank you very much. Now, coming up on the show, McAfee launching the world's first automatic and AI-powered deepfake detector. We'll discuss with the CTO next. Caroline, some more earnings, some more movers. What's going on?
Yeah, MongoDB actually basically the best performer on the NASDAQ at the moment in terms of the bigger names, more than 15% higher earnings. They're rising because the database software company basically is strong for the second quarter results, beating expectations. Some analysts really saying these are encouraging results. They're accelerating growth. And although not all is perfect, says Barclays, the overall growth rates have come down, but a stronger new business quarter in the Q2 is clear. This is Bloomberg Technology.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste. I think it's also how I grew up, making your own clothes and making something that's very special and very unique. It's like timeless. And now you see that everybody is looking the same, wear sweatshirts and wear t-shirts. And for me, it's just like when they wear something very special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally?
Definitely.
Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough to ensure that it is sustainable? There's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that it will be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything.
According to calculations on EIA data, US lower 48 nat gas gross withdrawals fell 2% in June versus May to 115.5 billion cubic feet a day.
Let's go to check in on the markets. I'm thinking quite a lot about Bitcoin, and for everything that's been going on, take a look at the last 5 days or so. We're down below $60,000 US per token. There was a period of the week where we were slightly up. At the beginning of the week, we were slightly down. It's been behaving in part like a risk asset in line with everything else that's been going on. there is some political adjacent headline that might be a factor here, Caro. I honestly don't know because I've been quite busy looking at other stuff, but that's the headline that I see on the Bloomberg terminal.
Well, blink and you miss actually some fundamentals here, Ed, because this is supply and demand dynamics when it comes to crypto and Bitcoin in particular. Sonali Basak has it all, and there's been some great data crunched on ultimately how much Bitcoin certain governments own and whether they might sell it.
Yeah, and it's interesting. Remember, many of these governments seize Bitcoin as part of looking for criminal activity that's happening within the Bitcoin universe, anything that they might seize from people that they're prosecuting. And so the numbers are quite large. The U.S. administration holds more than 200,000, China 190,000, Ukraine holds some as well. That was also in part through donations, remember, to finance their part in the war. But when you look at what's going on, a lot of this is because of a written by Kaiko as well about that supply issue, that overhang that could be to the tune of $33 billion. I will, however, also say, for the people who bought in during August, that has been pretty frustrating, hasn't it? Because you saw a big bump in Bitcoin prices at the heels of that Powell pivot, but really you've seen almost all of that erased, all of it erased really, since you've seen that bump. But you have, for the bright spot here, seen Bitcoin trade in a range throughout the entirety of August from $56,000 to $65,000. It didn't breach that $65,000 level. The other bright spot here, and what you could see, is thin trading volumes, both in the spot Bitcoin markets as well as Bitcoin ETF markets, where according to Bloomberg Intelligence, you have seen as high as $10 billion in liquidity here, and now closer to $1 to $2 billion. So whether we come back from Labor Day and get past this summer slump, things could be different. It's hard to say, but it has been a pretty orderly movement this month, even if Bitcoin has not kept up with the broader market.
The politics adjacent side of Bitcoin or news that I was referring to was former President Trump and make Bitcoin great again. Actually, the quote is that he wanted Bitcoin to be mined, minted, and made in the United States. But ahead of the election, that's a factor, right?
It certainly is. And remember, when it comes to Bitcoin mining, a lot of that is really done based out of China. It is a Shanghai-based firm and Beijing-based firms that are much bigger in the Bitcoin mining space than what you see here in the United States. But it's not for the lack of trying. Block is coming out with a service, or has come out with a service that you've seen some movement towards in recent days. But there's a long way to catch up here, Ed. And a lot of energy needs to help that catch up happen as well, and a lot of infrastructure. Next week, we're going to be tackling this issue for Bloomberg Crypto at 12 p.m. on Tuesday, because how hard is it to make that movement to U.S.-based firms? When we ask our guests as well how they feel about the Trump policies towards crypto versus what Harris says, we don't have a lot of information from Kamala Harris yet on how she might approach crypto. People have been very frustrated, of course, with the Gary Gensler SEC under the Biden administration. At the same time, you have had Bitcoin reach record highs under the Biden administration and multiple ETFs approved. So it's pretty hard to say at the end of the day. They just want clarity. And it should seem like we get more of that clarity in the coming months to come.
Bloomberg Sonali Basak, happy Friday. Thank you very much. I just want to switch gears. Computer security company McAfee has recently announced a new tool that will help users figure out whether the audio they're listening to in a video is real or a deepfake. It comes at a pivotal time. We've just been talking about how we're around 2 months from a US presidential election. Remember, earlier this year, we saw an AI robocall scam that impersonated President Biden, urging voters in New Hampshire to skip voting in the primaries. Steve Grobman is CTO at McAfee and joins us now to discuss. I actually want to start by asking you, why the tool now? Why didn't you do this sooner?
Hey, Ed, thanks for having me. You know, one of the things is we're at a pace at McAfee in the industry where we now have the power to build this type of technology tool and make it practical for consumers. Part of that is what we've developed. There's a rapid investment of innovation at McAfee, but also new technology in the industry. So, for example, McAfee Deepfake Detector that we launched last week, it takes full advantage of the neural processors that are in the latest generation of AI PCs. And it's that hardware plus software combination that really makes this practical so that users can run the analysis on the audio, looking for whether something is real or fake continuously without impacting power performance.
Okay. There are some constraints on the rollout of this. It's limited to a certain extent. But I just want to say it again. It's an analysis of the audio in a video. And it took me a while, Steve, to kind of get my head around that. Why is that approach important, audio review on a video?
Yeah, we looked at this very closely when we started our research into deepfakes. And one of the things that we found was almost every fake video has fake audio, but often there's no fake video element of it. So sometimes it's going to B-roll, sometimes it's just using the real video of somebody and having fake audio. So by tackling audio first, we're able to cover the most scams and disinformation that's really harmful to consumers. We know that deepfake audio is used for all sorts of purposes, some of it not harmful. There's a lot of AI parody videos out there. That's fine. But what we're really trying to help consumers detect is when they're looking at something like an investment scam that has a celebrity or a well-known individual making statements, and it is that deepfake audio that then they can detect, oh, like that's actually generated by AI, and I need to be a bit more careful. And especially, as we're 2 months away from the US election, anything that we can do to help arm consumers with powerful tools to detect disinformation is super helpful.
It's really quite interesting, almost fun, basically, going onto your website and looking at how you're helping people. No, Taylor Swift won't send you a free Dutch oven. And it's showing that there's a lot of B-roll of Dutch ovens used, and apparently it's Taylor Swift, but it's not when you check the audio and you look at other ones, of Gwyneth Paltrow, for example. Steve, though, going back to what Ed said about the limitations, how can we broaden this out? How can it be that anyone with any computer, any phone, can start to use your technology?
So this is our initial launch, and one of the things that you'll see from McAfee is this is the first inning in a long game, and we're not stopping here. We have a lot of great technology that's in the pipeline that's looking at all sorts of other elements around helping consumers detect AI-generated content. We announced some partnerships with Intel a few months ago, and you're going to see some great things from us in the future. So while we're super excited about what we launched this week, because it's real product that we can get in the hands of consumers to solve a really difficult problem, it's just the beginning, and there's a lot to come.
We've got an audience that loves the nitty-gritty of the problem. How difficult is it? What technology have you used yourselves to uncover these deepfakes?
Yeah, it is a difficult problem, but it's one of the reasons I'm so proud of the technologists, the data scientists we have here at McAfee, because we tackled this and we invented a lot of new technology, but we also worked with our hardware partners. The great folks at both Qualcomm and Intel have been working with us for months. We've been working with our OS partners, with Microsoft, and we built new AI algorithms that are basically detecting AI-generated content. So you can almost think of it as we're building good AI to detect AI-generated content that could be harmful to consumers, and really giving them the tools that they can use in conjunction with a better education of understanding that threats and scams can be AI-generated to protect themselves. And one of the ways that we're doing that is in conjunction with the launch, we're also launching an AI hub, which is a website that really focuses on the education side. So it's this combination of technology and educating the general public to keep themselves safe from this new wave of cybercrime that can be really damaging. We've seen some of the AI scams can take anywhere from $250 to $500,000.
Steve, when I was a kid, I had McAfee on my personal computer, either to clean it up or for some sort of protection. In this day and age, and sorry for the sort of washy statement, what's the business model for you guys in trying to fight deepfakes in an election cycle?
So McAfee is committed to keeping consumers safe from digital threats. And that means all sorts of digital threats. So the classic digital threats with malware, dangerous websites, we're still heavily invested in that, and that's a big part of our business. But we know that keeping consumers safe is much, much more. It's protecting consumers from disinformation, from scams, helping them protect their identity, and really all of the things that are going to be the forward-looking challenges for consumers in 2024 and beyond.
Steve Grobman, great to speak with you, CTO of McAfee. We appreciate it. Now coming up, Dell getting a revenue boost from its AI servers. We'll unpack the results. Coming up next, this is Bloomberg Technology.
In tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. The top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real-time data set. So using new technologies, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, where's the data coming from and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Dell delivering better than expected earnings. The company's second quarter revenue jumping 9% to $25 billion due to an increase in its sales of its servers that handle AI workloads. Woo Jin Ho of Bloomberg Intelligence joins us now, and it is the AI optimized server. And what I'm trying to understand still with Dell, is this because they're an essential cog of the data center build out, or there's a value add that they bring for the AI optimized server? Woo Jin.
Yeah, hey Ed. So there is a value add that Dell offers that others have a tough time doing. If you think about how some of these AI factories are being built out, they're building out clusters and clusters of AI servers. We're not talking about one particular server, but we're talking about hundreds of servers. Case in point, they did $3.1 billion in AI server sales. There's only one other company that I'm aware of that exceeded that, and that's only Supermicro.
And Supermicro has some issues at the moment, but I'm interested in the profitability of this. Sure, revenue goes higher. Sure, they're selling some expensive equipment, but how much are they getting in return for it, Woo Jin?
And that's a fantastic question, Caroline. And I think heading into the print, there was concern on the margin profile of AI servers. The one thing that I do want to dispel is the myth that it's a zero margin business. It is a low margin business. I think it's probably in the low to mid-single digits. If we saw the ISG margin, which is where AI servers reside, that improved sequentially 300 basis points. Part of it is product mix, but also the customer base. I think there was some prudence in the quarters in terms of deal making for Dell.
We keep an eye on Dell rising after what has been a revenue jump. That profitability is still being ironed out by Woo Jin Ho. We thank you so much, Bloomberg Intelligence. And just take a beat to be like, that is the end of this edition of Bloomberg Technology. Ed, what a week. What a powerful set of interviews you've done.
Yeah, it was interesting to speak to Jensen Huang. I have this question still whether Jensen Huang needs Michael Dell more than Michael Dell needs Jensen Huang, and I think we can continue to look into that. But astonishing across the world of technology. Recap today on the podcast. You know exactly where to find it on the Bloomberg terminal, as well as online at Apple, Spotify, and iHeart. Big thanks to the team in New York, Caro, Jackie, Caitlin, piles of very leading interviews here in SF. What a week. This is Bloomberg Technology.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
Good morning from our world headquarters in New York. I'm Manus Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
From New York City for our viewers worldwide, I'm Shonali Bassick, and Bloomberg Real Yield starts right now. Coming up, Consumer sentiment rises, household spending picks up, and PCE grows mildly. The numbers set the stage for Fed rate cuts starting next month. With one big data point still to come next week, the U.S. jobs report. But we begin with today's big issue, the Fed's favorite inflation gauge.
Feels pretty soft landing-ish for most of the data that we've gotten in August. So to me, this is a pretty good mix of data.
Consumers are absolutely the biggest concern that we have. Right now, GDP went up, it was revised, but GDI, the income component, was actually not that strong at all.
Consumer definitely is under some pressure, and we hear that from all of the company reports. What's boosting companies right now is the fact that they've been able to cut costs.
We are looking for a bit of noise in this data as we're going through this transition from very strong economy to, whatever word you want to put on it, but maybe not quite so strong.
There are a lot of risks out there that we have to remind ourselves we are in this late cycle environment.
A lot of murkiness in the data, but clearly the Fed now, the expectations are built in. For even a 50 basis point rate cut, it seems.
I think 25 basis points is what we see from the FOMC meeting in September. I actually think we only get one more this year, probably in December, and the market may have to reprice a little bit.
I think rates are going to nudge a little bit higher, maybe north of 4% on the 10-year.
Now, there are those downside risks, of course. The unemployment rate's much higher in that last report, so we have to watch these things closely, particularly in the labor market. But overall, I think a pretty good tone of data.
You saw the long-term numbers on U.S. PCE coming closer to that ever-elusive 2% number. But when you look at the short-term headline number on a 3-month annualized basis, a metric that economists say paints a more accurate picture of the trajectory of inflation, you actually see an even bigger slowdown. And you could see just how much progress has been made since the depths of 2021 and 2020. Let's flip up the board here and see how the bond market has reacted to all of this data over the past 2 weeks, because fascinating is we have lost more than 10 basis points in that 2-year yield. Short-term rates really feeling a change in sentiment here. And also you have to wonder whether this change in sentiment comes from that inflation data or also the growth figures that we've gotten in between. A lot of people in the market still pretty concerned here about what that job market will look like next week when jobs data comes out on Friday. Inflation is just half the story for the Fed. Wells Fargo's Michael Pugliese has his eye on the labor part of the equation.
The trend is very clear here in payrolls, in the unemployment rate, even in the survey data. Look at the last consumer confidence report. More consumers reporting that jobs are scarce, fewer consumers reporting that jobs are plentiful. And when I look at the totality of the data there, I think that's very reliable. Even if week to week in claims or month to month on payrolls, you get this noise from a whole bunch of factors.
Joining us now is Margie Patel from Allspring Global Investments and Bloomberg Intelligence Chief U.S. Interest Rate Strategist, Ira Jersey. And Ira, after you had the most recent data, there were calls earlier this month for this idea of that 50 basis point cut in September. There was a moment even when you heard people call for an intermeeting cut as well. But now you're seeing the market adjust quite quickly here to the idea of 25 basis points in September. Why is that?
Yeah, I think there's two things. One, the recent data that we've received this week, right? The GDP data, this morning's personal consumption and spending data, all of those suggest that the economy's okay. So therefore, if the Fed's going to cut, it's probably not going to be a supersized, 50 basis point cut to start. So the market is starting to price that out. Still a little bit of a chance of a 50 basis point cut. We're still priced for more than 75 basis points of cuts by the December meeting. I suspect that that's probably a little bit too pessimistic on the path of the economy, and the Fed will go a bit slower than that. But nonetheless, the market still sees pretty significant cuts all the way down to 3% by the end of next year. Use a WIRP function, look at SOFR futures. All of those things are pointing to pretty dramatic rate cuts over the next 15 months.
To that end, Margie, there are still at least 100 basis points of rate cuts priced in through the end of this year. Do you think that that's realistic?
No, I don't think it's realistic. It's looking too much.
You think it is too much. So if you think it is too much, then how do you put money to work in this bond market right now?
Well, I think it's better to look for long-duration bonds, whether investment grade or even high-yield bonds, because certainly the Fed is still on an easing cycle. There's no chance the Fed will begin to raise rates. So that says the trend of Treasuries is down. And also, there's really a supply scarcity of investment-grade bonds and high-yield bonds. Issuance has really been pretty low compared to previous years, and there's still a tremendous appetite for above-average yield paper. So you really have to be positive on investment-grade and high-yield bonds.
Fascinating that you say that about the supply here as well, because Ira, as you know, I have been pretty obsessed with this story and frustration from investors about the way that Treasury issuance has been brought about. There is that concern about activist Treasury issuance. Cannot believe that we are getting into this conversation. But if you think that there could be issues down the road when it comes to Treasury issuance, Ira, where would they come from?
Well, I'm not one that says the Treasury's active issuance and all of that kind of stuff, because the Treasury Department's job is to minimize the debt payments for the taxpayer within what Congress passes as this massive budget deficits all the time, right? So I don't see that. I think that the risk is that as interest rates come down, there'll be more term issuance. So the Treasury Department, as interest rates fall a little bit more, they'll increase the amount of 30-year, 10-year, 20-year debt that's being issued, and issue a little bit less in terms of T-bills. But keep in mind, like, there's massive amounts of money in the front end of the curve right now, so there's not a lot of reason for the Treasury Department to move away from issuing bills right now. Just last week we saw another, more record inflows into money market mutual funds, and all they can buy today because of the regulations is T-bills. So there's tons and plenty of demand, tons of demand for T-bills right now. Eventually that'll change, right? As interest rates go down enough, people will shift out of money funds and go into other asset classes. And that's when probably the Treasury Department will have to start shifting away from T-bills and into longer-term debt.
There's have to start shifting and can start shifting. Margie, if you think that the Treasury were to go further out on the curve here, given what you're saying about that demand for duration, the returns you're getting there relative to what you see elsewhere, do you think they'd succeed?
Yes, I think that they should issue more long-duration paper for a number of reasons, because basically the average maturity of Treasury debt is really too short if we had some sort of huge move in rates. And I do think that there's an appetite, again, every basis point counts for a fixed income investor. So I do think that if they issued long, you would see that absorbed by long-duration buyers.
Margie, separately, let's get back to the macro here, because of course there's the trading dynamics under the market, and they're certainly very complicated at this juncture. But next week is massive. We've had investors say not only are they watching very closely that jobs report, some have told us that they're even more worried about jolts. What are you looking for?
Well, I think it's a good point, because the Fed has its two mandates, full employment and inflation. And we've seen these multiple signs that employment is weakening, job growth is weakening, and yet inflation has been stubbornly above their target. So on the one hand, they would like to make minimal cuts in rates, and once again, they're too little too late on rate cuts, but yet you see the employment picture really sort of giving way. We've seen it in the low GDP numbers too, which says they're really betwixt and between. Historically, they favor being too cautious, waiting for the data, which says we'll probably see more slowdown in the economy and the jobs number. Inflation will probably continue to be a little bit sticky and not come down the way they'd like to see.
And Ira, this is a market that has been extraordinarily jittery towards jobs. You looked at that last jobs report, and the two words that were the most pervasive were growth scare. And so when you look at next week's jobs report, how much risk is there that that 50 basis point rate cut call comes back on the table?
Yeah, I think there's a pretty high risk. There's a lot of debate in the markets right now about, is it the non-farm payroll number, the wage number, or the household survey number that kind of matters? And obviously the markets are going to move massively on algorithms trading the headline non-farm payroll number, but the details will ultimately matter. And certainly if you get a number well below consensus, 125, 100,000 on payrolls, and you wind up seeing the unemployment rate tick up a tenth, then that 50 basis point call, I think, is going to be back on the table, and you'll see that priced into the market in a hurry for sure.
Margie, when you take a look at next week's numbers and you see perhaps that elevated move that Ira was talking about, something that is driven by computers as well, how do you fade that move? Do you participate in that market where we've seen volatility, yes, subside a bit, but still very present?
Well, I think basically looking at where rates are now, you really have to say that the direction for longer-term rates is really down. The Fed's really lagging the market. The market has been telegraphing the economy needs lower rates. And really a 50 basis point cut would be appropriate, but the Fed likes to be more cautious and slow. So I expect that they will lean more towards 25 basis points, even though that may suggest more weakness for the employment numbers.
But what kind of risk does the election then add? Really, this is the only FOMC meeting that comes before that November election. We have one soon after. And if we have a new president and there's worries again that inflationary policies could come into the economy, how do you invest for the longer term?
Well, I think the trend for inflation is really above where the Fed would like it, more be 2.5%, 3.5%, something like that. I don't see it coming down. And I think really the Fed has sort of gotten themselves in a box because now we're getting very close to the election. Historically, the Fed has not liked to make moves right before the election in case it might look as if they were influencing the outcome. And really the clock is ticking for the Fed to act in the face of weaker numbers and without coming right up to the election. But it more or less implies that after the election, we may see even lower growth in GDP, say for the first quarter of next year.
Margie, Ira, thanks to both of you. I'm looking forward to seeing your views after all that data comes out next week. That is Margie Patel of Allspring and Ira Jersey of Bloomberg Intelligence. And up next, we're going to talk about the auction block. U.S. credit issuance slows down to close out August, but September has more in store. This is Real Yield on Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big. With $1 trillion of assets almost, we're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
I'm Shonali Bassick, and this is Bloomberg Real Yield. It's time now for the auction block, where we saw a slowdown in U.S. credit issuance this week, but not in Europe. Its primary market saw total issuance in August soar past 100 billion euros, more than any any previous August since at least 2014, and it was one of the busiest weeks of 2024. And here in the U.S., with Treasuries, we saw auctions for the 2, 5, and 7-year. All saw the lowest auction yields in more than a year, with the 2-year having the lowest since 2022. And it was a slow week for investment-grade sales, but the days after Labor Day are usually one of the busiest of any year. A Bloomberg survey sees companies selling about $125 billion worth in September. And when it comes to high-grade credit, Colin Martin from Schwab is not worried.
If we look at investment-grade corporate bonds from a credit risk standpoint, we're just really not that concerned. We are worried that growth can slow, but we're not worried that a recession is necessarily on the horizon. That's kind of our firm view at Schwab. We're seeing signs here and there, but not in the next, quarter or two.
Joining us now is Credit Sight's Winnie Caesar and Invesco's Matt Brill. And I do want to start with the macro here because, Winnie, when you think about the riskier parts of the credit market, how much concern will you start seeing, you think, now that we start to finally see that economy weakening when the markets all year have shrugged off any worries?
Yeah, it's really interesting because the market did have that little blip of volatility. But even before that, lower rated parts of the high yield market, especially within the CCC universe, especially within those companies that have not been able to push out big near-term maturities, they have been struggling. We've seen some widening in CCC spreads. We've seen the distressed market also lag, which is a little bit counterintuitive given how strong momentum was in those segments last year, and then how economic data has been largely resilient and the rest of the markets have been quite strong this year on a fixed income perspective. So I think that there will be continued kind of follow through within that lower rated cohort if we start to see the macro unwind a little bit further.
Matt, the other thing here is the supply issue. You saw a rush of new issuance coming into the market earlier in the year, and you really started to see that taper off. You have a window here, it seems like, before the November election or any other potential risk events through the end of the year. How do you think supply and demand will start to shake out when it comes to new issuance, when it comes to the period right after Labor Day?
Yeah, so all year long we've been expecting supply to slow just a little bit, and it just hasn't done that. So I think it's been 7 out of the last 8 months have actually exceeded expectations for supply for that month. And then we're told, well, next month it won't be as bad, but that just hasn't been the case. And so I think as we come back next week, you're looking at probably even 50 billion next week alone. JP Morgan was saying they may have as many as 17 deals on Tuesday. So there's a lot in the pipeline here. But what I think is amazing is just the demand has more than met it. And post the Japanese carry unwind trade, the volatility there, Meta came with a large deal, and then everybody else came immediately after. And we were seeing 20 plus deals a day that week, and yet the dealers still were able to tighten spreads significantly versus the original talk. And actually, a lot of them have the relaunch where they went even tighter than what they had just told you they're going to launch at. So I think it just proves the demand is there. Investors just want things to be a little bit cheaper, and they'll buy even more.
Winnie, at the end of the day, where is the best risk reward you're getting along the credit spectrum here?
Well, we right now really like the high yield double B market. We think that the fundamental story for a lot of double Bs is very much intact. We don't expect to see the type of balance sheet erosion or potential for a massive fallen angel downgrade that generally weighs on double Bs. And it's also a longer duration segment within the high yield market, which should prove pretty good in a Fed cutting cycle.
Matt, do you agree that you can move a little further down the risk curve here and be happier with the return you're getting?
I think so. So I think we feel pretty confident about corporate fundamentals. We don't love credit spread valuations. We like yield valuations. So we think there's still going to be an upgrade wave coming out of double B high yield into investment grade. I think there's a lot of crossover buyers that were interested in buying investment grade at 6%, maybe missed their window, and now they're saying, okay, well, the Fed's going to be having the Fed put if things were to go wrong. So now they're stepping into double B high yield. So we're seeing real demand coming in from investors that have kind of been waiting for the all clear signal out of the Fed, and with fundamentals to go with that. We're still pretty positive here. Obviously, we wish credit spreads were 400 on high yield and 125 on investment grade, but that's just not how this is going to work. So anytime you see any volatility or backup, we're going to look to buy it.
Winnie, that was interesting what Matt was just saying about an upgrade wave. Would you agree with that, especially given the concerns we're seeing about a slowdown in growth?
Well, it's interesting because we think that there is still some momentum on the upgrade side of things, but it's much smaller capital structures than the ones that we've already seen upgraded. There was an initial wave of kind of the post-COVID upgrades where you saw Ford migrate back from high yield into investment grade. And we do think that there are still, a good list of issuers just with smaller capital structures that are probably moving back into the IG index over the next 12 to 24 months. It might be a little bit slower going given some of the choppiness on the macro front, but we do feel pretty good about that potential.
Matt, I'm going to make you answer as a bond investor here, something the equity markets have been wondering a lot about, and that is when it comes to companies that are not large caps, when it comes to the small and mid-cap companies. You've seen people flirt with the Russell throughout the course of August and really pull back, and a lot of those worries come down to leverage. Do you believe those worries are real?
So I think a couple of things around the smaller companies. They're typically in the bank loan market, possibly in the high yield market, some even in private credit. So private credit access is there. I think that's really the darling that everybody loves right now. So I don't see that pulling away. I think that will help that space. If you look at bank loans, they should benefit from the Fed cutting. So the companies that are borrowing, which are a lot of these small cap companies through the bank loan market, their borrowing costs are going to get cheaper. So we want them to continue to pay down debt. We think they generally are. If we see a hard stop and the Fed has to cut, that's clearly not as good as the Fed getting to cut because they're getting the soft landing. So I think those are kind of the balance there. And then traditional high yield is a little bit bigger cap. And I think you now have somewhere around 50% of the high yield market in double B. So that's generally not going to be your smallest cap companies. But overall, I think the biggest winner there will be from the bank loan market when the Fed starts to cut. And if you take 200 basis points off of all-in yield for these smaller cap borrowing through the bank loan market, I think that can be pretty material for their overall wellness.
Winnie, at the end of the day, how many rate cuts does the market really need to see to ease the pressure off of small and medium-sized firms?
That's a great question. And I think, 1 or 2 25 basis point cuts are not going to do it. Instead, we probably need to get back to that 3 to 3.5% area that I think a lot of people are thinking more as the neutral range. So that implies, a good 200-ish of rate cuts that really needs to come through the market before you see that momentum within small caps. Now, the reality is the market is going to price that in well ahead of where the Fed actually is, because once the Fed generally starts cutting, it's very rare that they kind of reverse course and start to hike again.
Winnie Caesar and Matt Brill, have a great Friday, a great weekend to you both. Of course, a busy week ahead, and we're going to talk about that next. Still ahead, we have the final spread. The week ahead has a highly anticipated U.S. jobs report and more jobs data through JOLTS. We're going to talk about that next. This is Real Yield on Bloomberg.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
Up-to-the-minute political news, whenever and wherever it happens. I'm Joe Matthew at the Democratic National Convention in Chicago, and this is Bloomberg.
I'm Shonali Bassick, and this is Bloomberg Real Yield. It's time now for the final spread, the week ahead. Coming up Monday, of course, is Labor Day with U.S. markets closed. Get some rest. We have a week of huge economic data. You have durable goods, beige book, PMIs, and various jobs data, as we've been talking about, including the big payrolls report on Friday. And for my final thought, let's get a look at those payrolls estimates here, because, of course, there's a big expectation that this jobs market perhaps is weakening. The prior report, the unemployment rate was 4.3%. The estimate's still coming in here at 4.2%. Remember, participation most recently had increased, but that sent the unemployment rate higher. Non-farm payrolls, though, are estimated to come in at 165,000, the prior being 114,000. Hourly earnings expected to come in 0.3% higher, earnings year over year, 3.7%. Remember, wages has been a big part of that inflationary story. Now, from New York, that does it from us. Same time, same place next week. And of course, next week, as we said, is that jobs data. Big show ahead. This was Bloomberg Real Yield, and this is Bloomberg.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, and but we also have to be nimble around that as well, because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Welcome to Bloomberg Markets. I'm Shonali Basak, and the S&P 500 is slightly higher after the latest economic data shows the U.S. economy is still holding up while leaving room for the Fed to cut rates. Let's get a check on these markets because you do have that S&P higher, but it has been down on the weekend. Interestingly enough, we are now actually losing a little bit of the bid here. We're having most of the sectors in the S&P lower on the day, so not too surprising here that the broader index is now following that momentum. NASDAQ 100 now 0.2% higher still on the day. The two-year yield hanging out at around 391 on the day. A little bit of movement there, and in the 10-year now below 390, now at 389 on the day. Remember, markets still largely on hold for that economic data next week. Let's look at some midday movers here on the equity side, though, because we're hearing a lot about the consumer. Starting with retail here, Lululemon, Ulta Beauty, both lowering sales outlooks. Lululemon fluctuating all day really here, now up about 0.2%. They're seeing increased competition and inflation hurt demand for yoga pants. And Ulta Beauty affected more by U.S. consumers cutting back on makeup and cosmetics. Both companies citing higher pressures dampening demand, but Ulta still down 2.8%. Remember, that was a stock Berkshire has recently gotten into. Now looking at tech, Intel moving higher after a Bloomberg report said the company is considering splitting off its foundry business. Intel's longtime bankers, Morgan Stanley and Goldman Sachs, have been providing advice on the possibilities, which could also include potential M&A. And off the news, you do have Intel now up more than 11.3%, really rising throughout the course of Friday's trade. And Marvel shares rising amid relentless AI hardware demand. It's also reporting earnings results that beat expectations. Analysts responding positively to the report, spurring target price upgrades already, and you have the stock up more than 10.7% on the day. Staying with AI, another big story we've been following is OpenAI's latest funding round, which has drawn interest from three of the most valuable tech companies, Apple, Microsoft, and NVIDIA. For more, we're going to bring in Bloomberg Technology co-host who has been in the heart of this story, so really the perfect person to talk to about this and many other things. But Ed, can you explain a little bit more behind this funding round here? Besides Thrive Capital here, what else are you expecting from the biggest players in this space, the big tech companies?
Yeah. I mean, OpenAI needs money. Training the largest large language models requires compute, it requires talent, and that's the short of it. The NVIDIA component is interesting. $100 million, according to our sources, is what they're thinking of. It's talks, it's not a done deal, but for NVIDIA, that's a drop in the ocean. Just consider the story in aggregate. You know, OpenAI's best and biggest models are all trained on the H100 anyway, but NVIDIA probably looks at all the names circling around OpenAI and goes, well, it'd be good to be a part of what's going on, right? To kind of know what everyone's intentions are here and have a seat at the table, so to speak, though there's no reporting to suggest they'd get any kind of board or board observer position.
And at the end of the day, what are the regulatory concerns that might exist for some of the largest tech companies being even more involved with OpenAI?
Well, it was particularly interesting in Microsoft's case. As you know, we've reported and various regulatory bodies around the world have disclosed that they were examining the relationship between Microsoft and OpenAI. But the cap table around OpenAI is now, or would be, more complicated if you also have Microsoft's peers, Apple, included in that. I don't know how antitrust regulators would look at that, for example. The point is that OpenAI probably still is the world's leading and most important developer of large language models, and now more broadly generative AI and enterprise tools. And that will always draw attention. I think we wait and see how this round goes and kind of what the net result of its already complicated corporate structure or operating structure is, and go from there.
Quickly here, Ed, at the end of the day, what does this mean for the other companies out there that are not OpenAI, that perhaps are not getting the same type of corporate interest?
Yeah, look, Apple is not a developer of large language models. It has some R&D where it's training its own models, but it looks to third parties. And indeed,
US
Apple
yields extend
Intelligence
decline,
is
the
built on
30-year
other
rising 4
foundation
basis
models
points to
from
around
the likes of
4.19%.
OpenAI. That's a well-reported story by Mark Gurman. So its interest is different, and it's so common, be it the cloud providers or the mega cap tech names, to have a financial relationship with those whose technology on which they're relying. You know, think about AWS and Anthropic in the context of Bedrock, for example. So it's almost kind of par for the course of what's happening right now in this industry.
Ed, we thank you so much for all your time and all your reporting. I hope you have the best long weekend ahead of you. Now, joining us with more on everything AI is longtime tech entrepreneur Arjun Sethi. He is the chairman and co-founder of VC firm Tribe Capital. He is also the co-CEO of Termina AI. Thanks for joining us, especially because your firm has invested in XAI. So you have a very close view on how these LLMs have been developing and the competition among them. Very curious about what you think about this latest OpenAI funding round and the corporate interest around it.
Yeah, thanks for having me. I think the right way to think about it is the corporate interest, especially from a company like NVIDIA, is more about if you take a look at their portfolio diversification of where their revenue comes from, the fastest growth in the future is going to come from companies like OpenAI and the types of developers that they're going to support moving forward.
Go ahead, please.
Go ahead. So what that means is that NVIDIA is not just a hardware and company, it's a hardware and software company. It's attracting developers, and they have to partner with other developers and other companies similar to OpenAI. So OpenAI being the biggest, it's a foregone conclusion that they have to partner with them in some capacity, similar to Apple.
So, given that you have invested in XAI, draw me a map a little bit on where different companies are going to play in this ecosystem.
So right now we're talking about LLMs, we're talking about foundational models. What we're not talking about is similar to the past where you've built the foundation, you've built the infrastructure, and the next layer of application companies are being built, which is essentially what are the next trillion-dollar companies that are out there. So OpenAI being one foundational, XAI could be another one that's foundational, Anthropic is another one that's foundational, but they're supporting the next level of developers. You take a look at what companies are doing today, similar to what a lot of venture firms are trying to figure out, which is how do you leverage AI to be more efficient, or how do I save cost or increase revenue? Today, with the aspect of what you see with OpenAI, is that every single company in our portfolio is leveraging these prompts and leveraging AI in some way. And so what is the net effect? Is that they're being 25 to 50% more efficient. It's not 10x yet. We're working our way there as these companies get larger and they build better developer tools. But that's an increased efficiency, and that has a high amount of impact. So any corporate interest that's coming into OpenAI is looking at that not just for themselves, but they're looking at that for the future of their business, keeping the business that they have with their developer community, and making sure that more of these developers are going to continue to succeed on their platforms, because that's what's going to continue to drive their business. So for NVIDIA, it's a lock-in because they have software plus hardware, and that is the de facto monopoly today.
Arjun, can you talk to me a little bit about valuation here? You have a report out from your company about what you call a weather report, about the supply dynamics in private markets. When we talk about OpenAI, we're talking about a valuation that could be over $100 billion, but really there are only a handful of companies in the world with that kind of valuation underpinning them. So what else are you seeing in the private markets right now?
So, the way to sort of think about private markets is worldwide. So let's take China, India, US, and then Latin America as a whole. US and China have sort of dominated valuations for a while, and a lot of capital has been flowing into anything that's software and tech enabled. The next phase of that was anything that's software tech enabled and the label of machine learning and AI. And so that's where a lot of the capital is going. So far, most of the investments in the private world that's been going into AI has been coming from corporates. It hasn't been coming from venture capital. Venture capital traditionally is invested in anything that's vertically integrated or vertical application, which basically means like, how do you leverage AI into a fintech? How do you leverage AI into healthcare, et cetera, et cetera? Those are where most of the investments are going in. So valuations for those types of opportunities in the beginning are really high. Then midway through the cycle, it becomes low again. And then what you'll see is something that's much more intrinsic versus options value related.
when you think about the global view here, there's a lot of concerns in the AI world about that competition towards AI spending, towards AI development between the US and China. What do the dollars say?
Well, most of the dollars today are going towards development in the United States. That's actually very, very clear. That said, what you have to look at in terms of what investments that happen outside of the United States, especially in China, was essentially for image recognition, anything that was related to cybersecurity or surveillance. And so that's how they had spent the majority of their capital, let's call it over the last 5 years. And we've spent that plus more over here that's been around AI, AGI, machine learning. So we're much further ahead for now. And you can see that in the types of companies that are being built, the types of products that are being built for every single vertical. So I always go back to cybersecurity, healthcare, financial services. You're going to see the first input there. You could call it GDP per capita growth, and then cost. So those are the bifurcations between the investments that are really being made. And then all the hyperscalers that are out there, they are going to benefit from all of this because you need more compute, you need more space, you need more training, you need more inference, which ends up being a net benefit for all the companies that are part of that stack.
Speaking of hyperscalers, I'm glad you brought this up. Of course, we had NVIDIA earnings this week. The initial reaction was disappointment. But something that struck me on the heels of NVIDIA earnings is even when you saw a day of earnings where the stock was down right after, you saw every other company in the Philadelphia Semiconductor Index immediately had the reaction in the opposite direction. There is still love for that AI boom. Is this, Arjun, because there is such a lack of investment opportunity? You mentioned a little earlier that a lot of this venture investment is actually coming from corporations. So what does that mean in terms of exit opportunities? Are there fewer in the future than meets the eye?
Yeah, so there's multiple questions there. I'll take a step back. So you look at NVIDIA, and the way in which you should think about it from our framework is that they have clear product market fit for hardware that they've built, and they have clear product market for the software that enables their hardware. A lot of the other companies that compete with them today don't have that. And so they're racing to be able to lock in developer interest. So all of them, they're racing to be able to try to commoditize that part of the stack. That hasn't happened yet. And I think that's a key point. So when you think about year-over-year growth of what NVIDIA looks like, if you think about year-over-year growth for the other companies that are on top of their stack, namely OpenAI, xAI, Anthropic, et cetera, all of these companies have to rely on that. And then you're going to look at the next part of the stack, which is what do all the developers do? How do they train, and what are the products that they're going to use beyond just open source? They still have to work off of hardware. So I think of this very similar to when Apple came out. Everyone had made a bet that Apple's devices are too expensive, it's going to be commoditized, and all of the other people are going to come in and compete with them. And then you had software developers moving over to Android, and you have roughly about a 50-50 market. You don't have that today. You don't have a clear competitor in hardware, and you don't have a clear competitor in software. So the question you have to ask is, at what point does that start diverging in terms of overall demand for processing and demand for inference and demand for training? And today it hasn't stopped. I do believe it will, and it will sort of level out at some point, but we don't know if that's 6 months from now or 2 years from now or 10 years from now.
Arjun, we have to leave it there. That is Termina AI co-CEO Arjun Sethi. We appreciate having you today. Have a great long weekend. And coming up, we're going to switch to retail. Lululemon falling today. We're going to discuss why yoga pants sales are sagging. This is Bloomberg.
In tech are on Bloomberg.
A large number of countries
are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. Billionaire Gautam Adani founded one of India's biggest and most controversial business groups. After being rocked by accusations from short seller Hindenburg Research last year, Adani is now preparing for the company's future in a real-life succession story. Meet the family members he's hand-picked to take over the business as we deep dive into the facts and rumors surrounding the Adani Group. Inside Adani, a Bloomberg exclusive replays all weekend, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that it'll be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg, context changes everything.
This is Bloomberg Markets, and I'm Shonali Bassick. It's time now for the stock of the hour. Like the S&P 500, Lululemon has turned negative in the session. The company lowering its sales and profit outlook for the year. The CFO saying the cut was due to, quote, uncertainties in the economy, including a shorter holiday season and the upcoming U.S. elections. Now, shopper preferences are also moving towards styles that are looser than the leggings Lululemon is known for. Comparable store sales fell 3% in the Americas in the second quarter. For more on this, we're joined by Poonam Goyal from Bloomberg Intelligence, who watches this market oh so closely. How much is competition a problem?
Competition is a problem, but that's not the problem here. The problem is the product in the women's category. They clearly blamed and have been blaming for the last 2 quarters that they don't have the right patterns, the right silhouettes, the right colors, sizes in their women's business. And as they work to fix that, we will start to see trends improve. But it's a wait and watch show at this point.
Well, it's fascinating because you've really seen the stock feel a brunt of the pain throughout the course of the year. It's down now almost 50%, including what you're seeing from today. So what is it going to really take for them to turn around, and will it require some costly investments?
It shouldn't require any costly investments because it's really about the product, and the product innovation pipeline that they have is already in place, but it's about making sure that they have more smaller sizes, that they have more colors, because that's what the customer wants. And then also that the macro doesn't slow any further, because I do think there's demand interest in the product and in Lululemon. That's still very, very high.
I'm going to pretend to be Matt Miller for a second here, because if he were sitting here, he would ask the question about GLP-1 drugs and what that really means for the potential for people to get out there more and work out, to buy clothes like Lululemon, to get healthy and fit once again. Do we know whether there is a new preference now in the wake of kind of this new GLP-1 wave?
Yeah, I think people still want to be out and about. They still want to be fit. They still want to look good. That's all still there. But people are also more balanced in their wardrobe, right? So we do have to remember that we're back to an almost or a normal environment now where you are looking for work clothes. You are balancing your closet with work, lifestyle, and gym. So it's not all gym anymore like it was 2-3 years ago.
Right. You and I were kind of joking a little earlier. I have swapped my legging purchases this year for cowboy boots instead. People are out there having fun again. Does that mean people want to see more from Lululemon than just athleisure? You think about some of those other brands that have moved kind of in the other direction towards athleisure from offering other things. You know, a lot of men's clothes from Lululemon people wear as everyday work clothes sometimes.
Yeah, they've actually been doing this for a little while now, where they've branched out into adjacent categories within apparel. So whether it's their jackets, whether it's looser tops, and even looser pants.
It's been 10 minutes time now at the top of the hour. We see the release of the weekly US Baker Hughes rig count numbers. Oil rigs, the prior was 483. Total rigs, the prior was 585.
We thank you so very much for your time. That is Poonam Goyal from Bloomberg Intelligence, of course, on one of the bigger stock stories of the day. Now, coming up, sources tell Bloomberg that Intel is considering seismic changes in the wake of another grim earnings report. We're going to bring you those details next. This is Bloomberg.
Earnings. I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real-time data set. So using new technologies, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, you know, where's the data coming from and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Markets, and I'm Shonali Bassick. A Bloomberg report says Intel is weighing options, including splitting off its foundry business. Intel's longtime bankers, Morgan Stanley and Goldman Sachs, have been providing advice on all the possibilities, which could also include potential M&A. Back in April, after its first quarter earnings report, CEO Pat Gelsinger spoke to Bloomberg about his positive outlook at that time.
We delivered a solid Q1, right? We met on revenue. We, beat on earnings. A bit tepid in the first half, as we said, but we see a lot of, improvement as we go through the year. And with that, obviously, the foundry business, as I would say, we're going to see progress on the foundry business every quarter from now to the end of the decade.
Yet just last week, Gelsinger told the conference that it has, quote, been a difficult few weeks, and the market didn't respond positively to the company's plans. But here with more on the Intel news is one of the reporters behind the Bloomberg report here, and that is Bloomberg's Ryan Gold. And I want to talk about really how we got here for a second, because there were rumors here that perhaps Intel was seeking financial advice in response to potential activist concerns here. What are you hearing?
Yes, I mean, those reports came out, I guess, almost a week ago, and there was a sense that they were taking counsel on potential activist defense. I think just given where Intel is, those reports weren't exactly surprising. But from what we could tell, talking to sources, where those came from weren't exactly clear. Because yes, while the company is vulnerable, I mean, just look at the tone that Gelsinger struck yesterday at the Deutsche conference. it wasn't exactly clear how an activist could come in and create an immediate impact or upside, because none of these options that we kind of lay out in the story are very, very easy to achieve. And so if you're looking at the way the stock went this morning, you probably think you may have missed out somewhat. But again, this is a very long-term project.
Yeah, this is a stock that's been down 56%, and to your point, it has been rallying today. So maybe the activists might be missing the opportunity, especially when they're proactive on their own. But perhaps with the stock declining more than 50% this year, you can call its entire shareholder base activist, can't you? What would fix the problem?
I think it's one of a couple of things. I mean, we lay out in the story.
So in 5 minutes time now, at the top of the hour, we see the release of the weekly US Baker Hughes rig count numbers. Oil rigs, the prior was 483. Total rigs, the prior was 585.
Has been trying to do in the turnaround. Let's not forget he was brought in to essentially fix some problems that his predecessors had sort of laid out under their watch. Doing a semiconductor fabrication plant takes years. It costs like $20 billion to build just one. It requires a lot of subsidy in many cases. And one of the things that many of the sources that we're talking to are mentioning as well is Intel still hasn't seen a dollar from any of the CHIPS funding that was awarded to it back when Biden went to Arizona earlier this year. And some of these scenarios that we lay out in the story could have an impact on how that CHIPS funding comes to
Absolutely fascinating. We have about 30 seconds left here, and I want your opinion here on how much you think that more private investment interests could be drawn to this stock after you've seen them strike deals with Brookfield and Apollo.
Yeah, I think the institutional investor question is a massive one. We have been told that Intel could think about just ballooning out that kind of private institutional investor interest. 10x what it did with the Brookfield and Apollo projects in Ireland and Arizona. But again, I think it's probably too soon. Something less drastic will happen.
Ryan, we thank you so much. Very excited to have you covering tech M&A for us over here. Of course, the Intel story will keep him busy for a very long time. Now, I'm Shonali Bassick. That does it for Bloomberg Markets. Keep an eye on this choppy trade throughout the day. This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight.
Shortly
with
expecting
replays
US
all
Baker Hughes
weekend
rig
on
count numbers for the
Bloomberg
week.
Television and radio. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons. Happy Friday, everyone. And we do have a lot of news to work through on this Friday as Bloomberg's new swing state poll with Morning Consult shows Kamala Harris up 2 points against Donald Trump across the battlegrounds. We'll have the details with Eli Yoakley of Morning Consult coming up and get reaction to that and Kamala Harris's first sit-down interview that happened on CNN last night with our political panel, Jeannie Shanzano and Lisa Camuso-Miller. Plus, as we're coming up here on Labor Day weekend, we'll take stock of gas prices, of course, something highly influential in this election season. Patrick DeHaan of Gas Buddy will be with us. And of course, as we consider energy costs, that feeds into the inflation data. We got today the Fed's preferred inflation gauge, PCE, came down. And of course, markets are reacting to that. So let's begin this hour with a check on those markets. Amy Morris has a look from here in Washington. Hey, Amy.
Hey, Kaylee. U.S. consumer sentiment improved in August for the first time in 5 months. Slower inflation and
So U.S. Baker Hughes total rig count coming in at 583.
The final August sentiment index rose to 67.9 from 66.4 in July. That's according to the University of Michigan. The preliminary reading was 67.8. Consumers expect prices will climb at an annual rate of 2.8% over the next year, down from the 2.9% expected last month and the lowest since the end of 2020. And a rally in stocks is starting to fade now. It's been a wild month on Wall Street with traders gearing up for next week's jobs data. We checked the markets all day long here at Bloomberg. The S&P 500 is up 0.1%. NASDAQ up 0.2%.
And oil rigs 483.
The 10-year Treasury yield at 3.9% and the 2-year yield at 3.92%. We're also watching shares of Intel, which is right now 8% higher. Sources telling Bloomberg that Intel is working with investment bankers to help navigate the most difficult period in its 56-year history. The company reportedly is discussing various scenarios, including a split of its product design and manufacturing businesses, and which factory projects might potentially be scrapped. Morgan Stanley and Goldman Sachs, Intel's longtime bankers, have been providing advice on the possibilities. Sources say it could also include potential M&A. Again, Intel shares are 8% higher at this hour. That is a Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lyons.
All right, Amy Morris, thank you so much. And a happy Friday to you. Happy Friday to everyone as we mark the last Friday of what I guess we unofficially call summer. It's hard to believe that Labor Day is already upon us, especially considering the summer we have had in American politics. It's been probably unlike any summer in modern American political history. If we remember back to Memorial Day, this was still a race, the longest general election cycle we'd seen in modern history between Joe Biden and Donald Trump. By June 27th, that fateful CNN debate between the two, where calls started to begin for Joe Biden to drop out of the race. And then, of course, on the eve of the Republican convention on July 13th, Donald Trump was shot in an attempted assassination attempt. 2 days later, he announced J.D. Vance as his running mate at the RNC. And just days after that ended, on July 21st, Joe Biden did it. He left the race and endorsed Kamala Harris, who within days had essentially locked up the Democratic nomination. She, of course, just wrapped up the convention in Chicago last week with Tim Walz, her running mate, at her side. And in the 6 weeks since she became the candidate, we have seen a big change in this race. Not only in terms of the fundraising game, she's crossed the $500 million threshold as of last week, but she's made dramatic changes in polling as well, doing far better than Joe Biden was at the point he left the race and gaining ground against Donald Trump in some of the key battleground states. At least that's what our latest polling indicates. Bloomberg, together with Morning Consult, taking a look at those 7 swing states and finding Harris ahead of Trump by 2 points on average across them. So for more on that, let's turn to Eli Yoakley, Morning Consult's U.S. politics analyst, who joins us every poll period. We've, of course, had 11 of these at this point, Eli, so we're getting used to talking to you. Thank you for being here on this Friday. Of course, we're within the margin of error in a number of these states. Not so in Wisconsin, though, where she's up 8 points. But broadly, this paints a picture of a wider map for Harris.
Yeah. I mean, things are much better for Kamala Harris than they were for Joe Biden. That sounds almost obvious to say, but your explanation of what happened this summer is right. I mean, it was a dramatic shift in the American political landscape, and voters noticed. Kamala Harris is on better footing than Joe Biden ever was across every single one of these states. That's the good news for Democrats. The challenge for them, the advantage or the possibility for Trump maybe, is the fact that a lot of these states are really, really close. I mean, Arizona's tied. Georgia's basically tied. Michigan's close. North Carolina and Nevada are pretty close. Pennsylvania, Wisconsin, Kamala Harris looks to be in an okay position, but those are also tight races. This contest isn't over. Maybe it was over before Joe Biden left the race, but that's what's changed in the last few weeks. This is a real race.
Yeah, which indicates that it's going to be rough and tumble for the next 60-something days, Eli, leading up to Election Day. When we consider, though, the idea that even though these are still incredibly tight margins, she is outpolling where Joe Biden was, what do we attribute that to? Is this Democratic voters who are more likely to turn out for a different candidate? Is this independents who seem to have been swayed from being potentially a double hater to at least tolerating her? Is this other demographics like Black voters, Latinos? What does the breakdown of the data show us?
It's all of the above. I mean, look, Joe Biden's problem when he was in the contest was he was not performing as well with his own 2020 voters as Donald Trump was. Kamala Harris has reversed that. We're seeing what everybody's calling a vibe shift happen in this contest. And one of the questions we asked in this survey kind of underscores that. We asked voters if they were voting, we asked Democratic presidential candidate supporters if they were voting for the candidate or against Trump. And when we asked about Harris this time around, they were 15 points more likely across the swing state map to ascribe that positive motivator to their vote than they were to Biden when we asked back in April. I mean, we were all at our Democratic National Convention in Chicago. We saw the energy in that room of core activist supporters. But, we're seeing that across the country. She was down in southern Georgia. There were lines in that rural community around the blocks trying to go see her. Clearly, something is happening there. She's getting so much positive media attention that is breaking through to the public. I mean, we've not necessarily seen a convention bump, and that's probably because she got her bump already when she launched her campaign after Joe Biden dropped out.
Well, fair enough. Maybe she already peaked, if you will, but it does seem that at least that peak has turned into a plateau rather than something that has gone back down the hill. Eli, I also want to zero in on the findings here regarding the economy and specific economic issues, including help for the middle class and housing, where it's not just that Harris is doing better than Joe Biden was on those issues. She is outpolling Donald Trump. What do you make of that? And where within the kind of economic indicators is Donald Trump still clearly ahead, knowing he has been trying hard to campaign on this issue?
Well, I mean, the biggest thing going for Donald Trump is the fact that the voters' perceptions of how the economy is performing haven't really changed very much. I mean, when Joe Biden was in the race, 72% said it was on the wrong track. Now 69% say that. The folks who see prices as increasing across the swing state map have not improved. That's clearly an advantage for Donald Trump. What Kamala Harris has seen is she is not totally associated with Joe Biden's being in the White House as one might expect. I mean, she has seen her trust over Donald Trump in a better place than Joe Biden's was when it comes to the economy. I think she halved Donald Trump's lead on the economy in our swing state tracking. It's not just the economy, by the way. I mean, we're seeing that about every single issue. Voters are much happier about her. They're disassociating her with the negativity that they associated with Joe Biden. You're right about Kamala Harris on issues like housing. That's clearly a good issue for Democrats this year. If Donald Trump can focus on the inflation issue, though, there is wide appetite among the swing state electorate for him to talk about that. The problem with his campaign, this has been the problem since he's been on the political stage, is he gets into sideshows. I mean, he spent the week fighting with Arlington National Cemetery this week. That's not going to be a winning message for an electorate hungry for answers about inflation.
Well, and maybe we'll get more of those answers leading up to the debate or on the debate stage on September 10th. Eli, if we consider the kind of themes we're likely to hear from these candidates, and frankly, we heard Kamala Harris sitting many of these themes, including housing in the middle class last night in that interview on CNN. Something else that she has talked a lot about and really dominated the convention in Chicago last week is this idea around freedoms, not just reproductive freedom, but others as well. And it was striking to see here, swing state voters trust her on that issue as well by a 5-point margin. This is kind of a departure of the way that Democrats and Republicans usually can lay claim to the freedom issue.
I know. I spent so much time in the early 2010s at Tea Party rallies talking about freedom with a bunch of conservatives. I think that Kamala Harris has done a lot of work, maybe with Beyonce's help, to try to reclaim the mantle of freedom for the Democratic Party. I think a lot of that discussion has been centered around abortion rights, and that is a big issue for a number of swing state voters. It's not the number one issue for a lot of people, but it is for a number of people. And those are core kind of Democratic voters. And her advantage on that issue is massive. She leads Trump by 21 points on that issue. That's clearly a good issue for her. And I think we've seen a lot of coverage recently of Donald Trump realizing it's not a good issue for him. I think it's been very clear since the Supreme Court overturned the Roe v. Wade abortion rights that Donald Trump has been not wanting to engage on that issue as much as possible. I think that Democrats, I think that the state of Florida is going to make it where he's going to have to. And I think that's going to be a topic of discussion at the debate, where we're really going to see some news develop.
Yeah, Donald Trump not really ready with an answer yet as to how exactly he's voting on that 6-week abortion issue in Florida, where, of course, he will be casting his vote. I do want to ask finally, Eli, because we've talked a lot about the people leading the ticket, Donald Trump and Kamala Harris, but they do have running mates who have been out there. Tim Walz was with her in that interview on CNN last night. This, of course, is a poll done now that we know that he is running beside her. How is Walz factoring in to the calculus for Harris and J.D. Vance for Trump, for that matter?
Well, Tim Walz is very popular. I think Kamala Harris, who's also very popular, more popular than Joe Biden or Donald Trump have been since we started tracking this back in 2022. Tim Walz pretty much matches her popularity. I think that makes him a very good campaign asset. And it's with all sorts of groups. It's with men, it's with women, it's with voters of color, it's with white people. Tim Walz is a good asset. J.D. Vance, I don't know how much his candidacy probably matters here. I mean, Donald Trump steals the show. It is a Trump show when they're out and about. The little asides get a lot of attention online. Some of his J.D. Vance's campaign missteps. I don't know that those are going to rock the world here, given that Donald Trump is at the top of the ticket. But on the other side of the ballot, I mean, Kamala Harris found a good running mate who can be an asset on the campaign trail in Governor Tim Walz.
All right, and we expect we'll hear more from both of them like we did last night throughout the course of the next 60-some days. Same goes for Donald Trump and J.D. Vance. And we'll be hearing, of course, more from Eli Oakley, I'm sure. We still have 2 polls to go this election cycle. We'll have more in September, in October. Eli Oakley of Morning Consult, thank you so much for joining me. And I'll be joined now by our political panel. Want to get some more reaction to this data. Jeannie Shanzano is with me. She's political science professor at Iona University and senior democracy fellow at the Center for the Study of the Presidency and Congress. Together today with Lisa Camusa Miller, former RNC communications director and host of the Friday Reporter podcast. Lisa, just to come to you on that ending note there, the idea of the role that the vice presidential candidates, the running mates, are playing here. Now that we are more than a month out from the selection of J.D. Vance, we're only weeks out at this point from the selection of Tim Walz. How do you view whether or not they are adding or detracting to the tickets they're representing?
You know, it's interesting to me for both sides that really Donald Trump and what was just what you all were just discussing is absolutely true. Donald Trump is Donald Trump, and he is probably bigger than life in all of those circumstances. So J.D. Vance, while not really making very much of an impact one way or the other, not necessarily detracting from him because people are really voting for Trump. But on the Democrat side, it's actually quite interesting. I think that what's interesting to me as we look at this ticket is that we're getting to know both of these candidates at the very same time. And Tim Walz is very likable as it relates to just the way he approaches the audiences and the groups that he's connecting with, the people that he's speaking with. He's very authentic. And that is the difference between those two number 2 candidates, is that J.D. Vance, I think, is still trying to figure out who he is. And Tim Walz very much knows who he is and what his brand is. And so that's kind of interesting. But more than ever, I mean, I think that we're meeting Kamala Harris and Tim Walz at the same time, whereas we know who Donald Trump is, and we really don't know very much about J.D. Vance other than sort of what we've read and what we see. The two of them together are very different, but also very similar in that regardless, people are voting for the number 1 candidate, but the number 2 on the Democrat side, I think, is very much helping more than J.D. Vance is helping Donald Trump.
Well, so to this point, Jeannie, of course, we did this poll knowing Tim Walz was running with Kamala Harris. And when he was selected, everybody was like, okay, well, he's from Minnesota. He has that Midwestern appeal that could work in the Rust Belt. He also had a rural upbringing and was a gun owner and things that may be able to help resonate in other areas. To what extent do you think that is actually showing up in these polls across the swing states, with that 8-point margin in Wisconsin, for example, and frankly, the lead Harris now has in Georgia and North Carolina?
You know, I think it can be showing up, particularly in a place like Wisconsin, his neighboring state. Traditionally, all of our research shows that vice presidents, as much attention as we give them on the ballot, don't make that much of a difference. So I'm not sure it's making that much of a difference now. But what I would say is you have to imagine, what if Donald Trump hadn't had to choose J.D. Vance before Harris
Shortly
was
expecting the results of the Fed reverse repo
if he had gone
operation.
with somebody else, you know, J.D. Vance, he doubled down on the far right of the party. If he had gone with, say, a Nikki Haley, or even somebody like a Tulsi Gabbard or somebody else, how different this election might be, particularly in issues involving women and women's reproductive health. So, you know, I think before Donald Trump had, you know, the misfortune of having to make a decision before he knew who he was opposing. And I dare say he would have gone in a different direction given the issues he's confronting now with Kamala Harris.
Well, and on just the idea of the issues and what Donald Trump has continually brought up in his attacks against Kamala Harris, not the personal ones, but the policy ones, issues like the border, and of course, the economy. We've spoken about how this poll does show that Harris is polling better on some economic elements like housing and the middle class than Donald Trump is at this point. Lisa, if that is true, where are the best messaging areas for Donald Trump to hit her on? Is it still going to be the economy, or does
72 counterparties take $433.13 billion at the Fed reverse repo
to the point that I
operation.
think Jeannie just made, and to add on to what I said earlier, this is a base election. Each one of them picked a candidate for their number two that very much speaks to the base of the various parties. And so regardless of whether it's immigration or it's the economy or anything else, each one of those candidates on either side of the aisle will have to talk about issues that will motivate and excite the base to get out and vote. And so, yes, I think that immigration is one that continues to motivate and get the base out on the Republican side. Talking about economic issues for each one of them is very, very important. This is absolutely going to come down to turnout, and it's going to come down to support, because there is such a slim margin of people that are undecided and haven't figured out who they want to support, that they're going to have to figure out a way to talk about the issues as it relates to immigration, the economy, or otherwise, in a way that appeals not only to who the people that are already coming out for them, but that slim margin. And that's going to be very difficult for either one of them, because until they can figure that, whoever figures that out, Kaylee, is the one who's going to win.
All right, Lisa Camuso Miller and Jeannie Shanzano, my political panel today. Thank you so much. We'll have much more with them still ahead as we consider the issues of turnout and what's going to drive voters to the polls. We'll assess the language and the words we heard from Kamala Harris and Tim Walz, for that matter, in the CNN interview they sat down for last night. We're going to have much more on that ahead with our political panel, especially of interest for our audience here, of course, what she said about her economic policies, as well as things like fracking and how she's changed her view on that over the course of the last, say, 5 years. So much more is still ahead here on Balance of Power. Happy Friday to everyone. We're beating the drum toward Labor Day and the real sprint kicking off toward Election Day. But of course, for many of us, we've been sprinting for some time now. This is Bloomberg TV and Radio.
countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Billionaire Gautam Adani founded one of India's biggest and most controversial business groups. After being rocked by accusations from short seller Hindenburg Research last year, Adani is now preparing for the company's future in a real-life succession story. Meet the family members he's handpicked to take over the business as we deep dive into the facts and rumors surrounding the Adani Group. Inside Adani, a Bloomberg exclusive replays all weekend only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that it will be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. The top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real-time data set. So using new technologies, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, where's the data coming from and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
It's 1:21 on Wall Street. I'm Amy Morris. Stocks climbed after the latest economic data showed the economy is holding up while still leaving the door open for the Fed to cut rates a few times this year. But the rally is starting to fade now. We check markets for you all day long here at Bloomberg. The S&P 500 is up 0.2% or 9 points. NASDAQ is up 0.3% or 52 points. And the Dow is now down 0.2% or 83 points. The 10-year Treasury yield at 3.9% and the 2-year yield is at 3.92%. And the U.S. economy may be on the verge of a major social change. The labor market is forecast to grow by 0.4% each year over the next decade. That is less than a third of the pace from the last decade. And that is historically low. And the Labor Department says the main reasons are slower population gains and baby boomers leaving the workplace. And what would help? The government says in some cases, AI will fill the void. That's your Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
All right, Amy Morris with a look at the markets. Thank you so much. I'm Kaylee Lines in Washington. Welcome back to Balance of Power on Bloomberg TV and radio, where, of course, we just witnessed last night the moment we've all been waiting for, at least for journalists and political junkies as well. The first sit-down interview Kamala Harris has done since becoming the Democratic nominee. Of course, it wasn't an interview she did alone. Her running mate, Tim Walz, was there beside her on CNN as they fielded a number of questions from Dana Bash, including for Harris, questions around the way in which her policy has flip-flopped or evolved in the last several years when it comes to things like the border and fracking. Kamala Harris effectively said, well, my values still haven't changed.
Dana, I think the most important and most significant aspect of my policy perspective and decisions is my values have not changed. My value around what we need to do to secure our border, that value has not changed. I spent 2 terms as the Attorney General of California, prosecuting transnational criminal organizations, violations of American laws regarding the illegal passage of guns, drugs, and human beings across our border. My values have not changed.
So with reaction to that and the other bits and pieces of policy we got in the interview last night, we turn back to our political panel. Jeannie Shan Zaino, Senior Democracy Fellow at the Center for the Study of the Presidency and Congress, and Lisa Camusa Miller, former RNC Communications Director and host of the Friday Reporter podcast. Jeannie is the Democrat. I will come to you first. Is the values case she's making here enough to withstand the attacks she's getting from her opponent when it comes to the way in which her policy has changed?
Yeah, I was trying to count the number of times she used the term values. I didn't get quite a good number, but it was a lot. And clearly that was what the campaign wanted her to underscore. And they seemed happy with how this came out. I don't think it's quite enough. I think it is a start. She wanted to make the case that while her strategies for achieving and implementing these values have changed, that her underlying core has not. But of course, as voters, we do need specifics. We need to know what her plans are. We didn't get that. I think, of course, just like the use of the term values, it was by design. They didn't want to give the Trump campaign anything specific to come back with. So she kept it pretty vague, pretty general. It's enough for a first interview, but not enough for the next 60, 70 days.
Well, and on the subject of specifics, Lisa, she was asked right from the jump about day one. You're elected president. You get to sit in the Oval Office. What do you do first? And instead of having, specific things she would want to sign in terms of executive orders or regulations she would look to put into place or undo, she effectively just said she wants to help the middle class and create an opportunity economy. Does she not need to have a better prepared answer than that?
Oh, she definitely does. She definitely does. And the other thing too is, we can cut this any which way we want to. But the truth of it is that she needs to do more sit downs, more conversations. She needs to be much more ready for these kinds of questions and answers in a way that's competent and committed to what it is that she's going to do. Do I think that not having a direct answer on that was obvious? Yeah. But do I think that she should have been prepared and ready for it also? Absolutely. And that's the kind of thing that she needs to be very crystal clear on. She needs to be clear and direct about it. It's the one thing that's going to set her apart from Donald Trump because he has no specifics ever. He speaks in lots of platitudes. He talks about a lot of things in sort of a variety of different ways. His style is very different. So for her to be direct, honest, and have a crystal clear answer for the people to hear and digest that's going to set her apart. So having talking points and referring back to values is cool, but also too, she really needs to get deep, dark, and into those specifics so people can say that that's exactly what they like about her is they know what they're going to expect and what it's going to be. But having these sort of like big epic moments where she's sitting down for the first time, enough of that. That is not going to serve her well. People will continue to carve up every answer she offers in a way that is perceived as something that's very new and different and fresh. She should continue to have conversations with journalists all day long and start to make that a very regular part of who the campaign is and what the campaign is, because that's what's going to define her from Donald Trump.
Well, it's also about defining her not from just Donald Trump or creating that contrast, but also creating the contrast with Joe Biden. Right, Jeannie? It did seem that throughout the course of this interview, she was trying to cast herself as the candidate of change, even though she technically is the one who's the incumbent here.
Yeah, absolutely. She wants to be the new kid on the block, if you will. And she tried to do that throughout the interview. This is what drove J.D. Vance absolutely batty about the entire thing. And he is not wrong about that. Two other things about this interview. Number one, somebody on her team really didn't do the optics well. That is not good TV, as you know better than anybody, Kaylee. That was not a good look. And number two, you knew that this was not a groundbreaking interview because CNN was putting out this TMI quote. And I kept wondering, what was the TMI? It was going to be a big reveal. And it was something about like bacon and puzzles. So, you knew she did no harm, but she didn't necessarily jump over the hurdle in the way this thing was built up. And quite frankly, I don't know why it was built up the way it was. To Lisa's point, do interviews, do many of them. It shouldn't be a big deal. You're leading the ticket on the Democratic side.
Well, I want to ask you about something else as well, just on the Democratic side. She, of course, made it pretty clear over the course of the interview that she remains on the side of Joe Biden. Jeannie, she was asked by Dana Bash if she regrets it all, saying that Joe Biden was still fit for office. She described him as someone who had the attributes of a president and things that Donald Trump, in her words, doesn't have when it comes to commitment and disposition. She also didn't really seem to try to distance herself much from Bidenomics. She listed a laundry list of things this administration has done in that regard and called it good work. Could that backfire?
It absolutely could. If Donald Trump and J.D. Vance are able to make her the president now, and that's what they're trying to do, say Joe Biden isn't capable of being president, he is not in control, she is the president. If she wants to do all these things in the future, why isn't she doing them now? If they are successful in doing that in the next 60 days, this election is going to be hard for her. The problem is, of course, as usual, Donald Trump is getting in his own way, trying to get that message out there.
Well, and on the subject of Donald Trump, Lisa, do you see any opportunities created in that interview yesterday that he could use to weaponize against her on the debate stage in Philadelphia on September 10th?
Oh, I mean, absolutely. She doesn't have a clear answer on why she changed her mind on fracking. She didn't change her point of view about why it is that she's different from Joe Biden. Jeannie's point is very good. I also, though, think that she runs a risk. Kamala Harris runs a risk in separating herself too much from Joe Biden because she still is trying to secure the base around her as the nominee and making sure that people will come out for her. So she can't pull away too far. It is definitely a needle to thread, and she's going to have to be careful about that. But if you're on the Republican side and you're seeing all of these, I saw a lot of opportunities where she left a lot of windows open and opportunities for Donald Trump to follow up and really sort of go in a way to ask her hard questions or respond to some of the things that she said that will definitely have her on her heels unless she's very, very well prepared. She's got more work to do.
Well, of course, if we're considering policy changes or differences the candidates seem to be adopting now in the way they approach certain policy, it does seem we're getting some from Donald Trump when it comes to the issue of abortion specifically. Of course, he has said repeatedly that he is proud of nominating the justices to the Supreme Court who enabled the overturning of Roe v. Wade, but recently has tried to describe himself as someone who would be good for women's reproductive rights. J.D. Vance said Trump committed to him that he would veto a federal abortion ban. And also yesterday, under questioning from NBC, about how he would be voting on the abortion question in his home state of Florida and the 6-week ban. This is what he said in response.
I think the 6 week is too short. It has to be more time. And so and I've told them that I want more weeks.
So you'll vote in favor of the amendment?
I am going to be voting that we need more than 6 weeks. Look, just so you understand, everybody wanted Roe v. Wade terminated for years, 52 years. I got it done. They wanted it to go back to the states. Exceptions are very important for me, for Ronald Reagan, for others that have navigated this very, very interesting and difficult path. Our country's been torn apart by Roe v. Wade for years.
Lisa, who is that message going to resonate with? Is that going to bring any pro-abortion rights advocates more on Donald Trump's side, or does it only risk alienating the pro-life portions of his party that may be disappointed with that kind of answer?
There's a lot of hand-wringing over what he said. I think actually it's quite smart that the president is working with his staff to figure out how to thread the needle and make sure that he's not only appealing to the fact that he was the guy who put the justices on the bench that made sure that Roe was overturned, but also to talk about the fact that he's actually considering women's health and women's rights. This is all so nuanced. It's actually kind of crazy that we're talking about it even at all, but it is a difference for him. But he's trying to figure out how to appeal to those who are with him in the base, but also to really offer an olive branch to those Republicans and maybe Republican-minded folks in the middle who maybe wouldn't select him as their choice because of his position on women's health issues and women's rights, but also too maybe in a way that appeals to them differently this time around.
Well, also tied to this conversation is questions around fertility treatments like IVF. Donald Trump said yesterday he wants the government or insurance companies to pay for IVF, to make it free. Jeannie, how far does that argument go if Republicans in Congress just recently wouldn't even vote to make it sure that it was federally protected?
Yeah, it's not going to go very far. And we are seeing a mirror image, Kamala Harris and Donald Trump. The rule in American politics is when you go too far left or too far right during these primary seasons, you live to regret it. Donald Trump on reproductive rights, Kamala Harris on fracking, Kamala Harris on immigration and everything else. So they're both trying to run to the center. And the reality is, in an election, they have to both appeal to the center, this general election, and to the base. And it's a tricky business, but we see them both struggling to get there. And on IVF, he is doing the same thing he's doing on abortion, and nobody is happy about it on the far right. Just look at how Tony Perkins from the Family Research Council responded to his Truth Social posts on this issue.
Great point.
All right, Jeannie Shanzano and Lisa Camuso Miller, you both have made some great points today. I appreciate you joining me. Wish we had more time for our political panel, but happy Friday to you all, of course. Labor Day weekend is almost upon us. Just a few hours to go still of this work week. And of course, as we get ready for the holiday weekend, a lot of people are gassing up the car, getting ready to travel. So what exactly will the trajectory of those prices at the pump be? We're going to have more on that with Patrick DeHaan of Gas Buddy just ahead on this day in which, of course, we got some pretty critical inflation data for the Federal Reserve, and energy does factor into that. We'll have more next on Bloomberg TV and radio.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
How can you have dinner with friends without hinting at what you're thinking about? And do you ever get suggestions from your friends at dinner, this is what you should do? And how do you respond when they kind of say, maybe you should lower interest rates? You just keep eating or what?
You might define the word friend to mean doesn't ask you about interest rates. So, no, people don't do that generally. You know, people I don't know will always say, hey, cut rates. Somebody said that in the elevator this morning.
Did that influence you or no?
I said, thank you, sir. You know, and no, but I mean, you know, people say things, but you know, it's fine.
So in some parts of the society these days, people are making decisions based on something called artificial intelligence, AI. Have you thought about, you know, calling up ChatGPT and saying, you know, here's all the data we have. What do you think about would be a good idea? Have you ever thought about that, or they're not going to likely do that?
We haven't done that. I mean, we have done little things like we've asked ChatGPT to generate questions for the press conference. And I'm happy to report for any journalists who are here that the questions were not as good as the ones we get from real journalists. So,
what about my questions? How do they compare to my questions? Okay.
No comment.
Right, so they weren't that great. Okay.
People
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
Morning from our world headquarters in New York, I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything. A lot's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight, with replays all weekend on Bloomberg Television and Radio.
Up-to-the-minute political news, whenever and wherever it happens. I'm Joe Matthew at the Democratic National Convention in Chicago, and this is Bloomberg.
It's 1:40 on Wall Street. I'm Amy Morris. The core PCE price index, the Fed's favored inflation gauge, came in slightly better than economists expected, up 2.6% year over year. The prediction was 2.7. Personal spending rose from last month on an inflation-adjusted basis, even with pandemic-era savings winding down. August also on pace to be a blowout month for Walmart, and a disastrous one for some of its competitors. Consumers are reining in their spending. Shares of Walmart surged some 12% in August, on track for their best month since October 2017, adding roughly $64 billion to the company's market capitalization. A stronger than expected second quarter earnings report fueled by price-conscious shoppers drove that advance. Shares of Walmart right now 0.5% higher. A new study finds Wegovy, the weight loss shot from Novo Nordisk, reduces the risk of death from COVID in obese patients. The findings in the Journal of the American College of Cardiology provide a deeper analysis of Novo's largest Wegovy trial called SELECT. It showed that patients on Wegovy were 20% less likely to suffer a heart attack or stroke than those on placebo. Shares of Novo Nordisk are 1.7% higher. And we check the markets for you all day long at Bloomberg. Indexes are mixed at this hour. The S&P 500 up 0.1%. NASDAQ up 0.3%. The Dow is down 0.2%, and the Russell is down 0.3%. That is a Bloomberg Business Flash. Now back to Balance of Power with Kaylee Lines.
All right, Amy Morris with a look at the end of the trading week. Kind of the end of the trading summer. Thank you so much. I'm Kaylee Lines here in Washington. Welcome back to Balance of Power on Bloomberg TV and radio. That's right. Labor Day weekend is upon us. We just have a few working hours to go before the holiday weekend, in which a lot of people will be traveling. If the forecasts are to be believed, many of them, of course, traveling by car. And the good news, I guess, for drivers is that gas prices are lower going into this Labor Day weekend than they were this holiday weekend last year. Of course, back then we were looking at $3.80 and above on the average AAA gas price across the country. Now, as we stand here at the end of August, $3.35 a gallon is what you'll pay at the pump. Well, we want to get into the dynamics we're seeing in gasoline prices a little bit more as we look ahead to this holiday and, of course, beyond it, a presidential election in which prices at the pump could matter quite a lot. So we turn now to Patrick DeHaan. He is Gas Buddy's head of petroleum analysis. Welcome back to Bloomberg TV and radio, Patrick. Always great to have you. So we look, obviously, at the average Labor Day weekend price being down nearly 50 cents from last year. Is this a trajectory that you see continuing once the summer driving season officially comes to an end?
Yeah, Kaylee, I think it is a solid trajectory. As you mentioned, prices almost 50 cents a gallon lower than last year. That's a 13% shopping block. And while the disinflation has hit gasoline and diesel, it's still not hitting other areas of the economy, and that's why demand this summer has been relatively weak, and that's why we expect that this downward trend will continue. We got a little bit of a shot in the arm for that as well. Today, OPEC rumored to be considering raising its production, sticking with its plan, which is a bit of a surprise, but we certainly could see more and more gas prices below the $3 a gallon mark. Gas Buddy data showing 8 states where average gas prices are below $3 a gallon for Labor Day. that number could double or even triple by the time we get to Halloween or into Thanksgiving.
Okay, well, so that, of course, puts us, if we're talking Halloween, just on the cusp of the presidential election. So where exactly do you think the average price will be come November 5th, Patrick?
Certainly a good possibility. We could be just teetering on the $3 a gallon mark, potentially falling below it. Now, there are some contingencies, some caveats. You could say the typical caveats apply. Hurricane season has been relatively quiet, but we are in the prime. There are a couple areas of interest that the National Hurricane Center is monitoring. And of course, the other wild card, the Middle East. Tensions right now de-escalating a bit, but there's always the possibility that there could be new violence between Israel and Hamas or Hezbollah or Iran. And so that could be a wild card. But I think there's a pretty solid chance that if not by Halloween, the national average could fall below the $3 a gallon mark by Thanksgiving.
Well, that certainly is something to consider as we think about the political consequences of that. On the subject of politics, there, of course, is an argument that's being made by Donald Trump when he is talking about what he wants to do to get inflation down. Frequently, Patrick, his answer is drill, baby, drill. Of course, as we consider where prices are right now, it is against a backdrop of record oil production in the U.S. How much would drilling more, pumping more, matter actually to gasoline prices if we're still considering refining margins here? And frankly, oil companies by and large still have tried to maintain capital discipline. They're not really seeking to pump more, right?
Yeah, Kaylee, exactly right. It's taken a long time for us to reach this 13.3, 13.4 million barrel a day territory, really since COVID. And as you mentioned, this has been a very calm, cool, and collected environment that oil producers have raised production. Now, keep in mind, on the other side of things, OPEC is getting a little bit, some OPEC members rather, are getting a little bit tired of those production cuts that OPEC announced last year. And so OPEC is poised to bring some of that back. The other wild card, too, for President Trump saying drill, baby, drill, again, the U.S. is not a state-owned oil company. There's only so many incentives you can give oil companies to do what would be against their interest, and raising production, which could potentially undermine the cost of oil and drive it down. The other factor that's really interesting is Trump's potential play when it comes to tariffs, promising maybe 20% tariffs. Keep in mind, the U.S. produces millions of barrels a day of oil from Canada. Those tariffs could send gas prices skyrocketing in areas of the Midwest if President Trump is serious.
Is there an equivalent 20% tariff cent figure at the pump, or a relationship between the two? How much realistically do you think that could increase gas prices in the worst case scenario?
Well, a 20% increase might today represent a $15 a barrel jump. That $15 a barrel divided by 42 is not an insignificant number. That could boost gas prices theoretically in the ballpark of 15 to 35 cents a gallon. It would be contingent on season. The bigger increase if the tariffs were established would be when gasoline demand is highest and when refineries need to kick out supply. So that's not something small. And when we're talking about the difference between $3 gas and $2.80 gas, that could be a differentiator there that President Trump may risk the ire of folks, especially in the Great Lakes, which is the market that Canadian oil is the beneficiary to. Great Lakes refiners predominantly produce oil derived from Canadian crude. So that could be problematic in areas of the Midwest.
Well, I also have to consider as well, when he's talking about tariffs, but well beyond 20%, potentially 60% on all goods coming from China, which is obviously a massive trade partner, can not only have ramifications for the economy at home in terms of higher costs, but could be very detrimental to China's own economy, which already is struggling. How much of the lower prices we're seeing, Patrick, are because of weakness in the second largest economy?
Certainly a big portion of the discussion this year has been a lack of consumption in China, where they're likely continuing to fill their strategic reserve. And once that's done, if their economy can't get off the ground, we could be looking at a real struggle for crude oil. And that's why it's interesting that OPEC would be choosing now to potentially raise production. The U.S. economy may start to improve, but in China, it's been a difficult guessing game on throwing things at the wall and to see what will boost the Chinese economy. Nothing's really worked just yet. So, if China remains in this economic slowdown, it's going to have a profound impact on oil moving forward. Arguably, it could offset the potential impact from some of these tariffs that Trump had outlined.
Well, of course, as we consider what China is doing to stimulate its own economy, there could be more stimulative monetary policy coming in the U.S. pretty soon. The Fed is expected to cut rates in September. And if markets are to be believed, they could cut a whole 100 basis points by the time the year is over. Do you expect that there's going to be a demand translation from lower rates when it comes to prices at the pumps? Or if this is happening in the fall and winter seasons, will it not matter as much?
Yeah, it probably won't be as significant as cutting rates or having low rates in a more conducive environment as spring or summer when Americans are feeling much better about getting out because of low interest rates. I think that would be the primary time of year that there would be a windfall when it comes to gasoline demand. Right now, with schools reopening, Americans are back to the grind, back to their normal Monday through Friday commute. And there's not a whole lot of uptick. Now, it could mean some Americans feel better. They may take some fall road trips, some foliage color tours, but I think there's a lot more opportunity next spring and summer. Should the economy slow down, Americans may start to feel better about their prospects, and that could raise demand going into 2025.
All right, Patrick, really appreciate the analysis. Great to have you on this Labor Day weekend eve. Patrick DeHaan is Gas Buddy's head of petroleum analysis. And I want to talk more about the Federal Reserve potentially cutting next month. I think that might be a given at this point. The question is, of what size cut will we get, and how does today's data inform it? We, of course, got the crucial PCE figures. This is the Fed's preferred inflation gauge, by and large, in line, up 0.2% on a month-on-month basis, 2.6% year-on-year. For more, let's turn to Anna Wong, who is our chief U.S. economist here at Bloomberg Economics, is joining me in our Washington, D.C. studio. So the figures largely in line, Anna. Not sure this will change anything either way of the Fed's consideration of how much it wants to cut in a few weeks' time. But of course, we have a jobs report and CPI coming up before then.
That's right. And Powell did tell us at Jackson Hole that inflation is not as much weighing on his mind in terms of the decision to cut and the size of the cut. Rather, it is the employment situation. So next week, we are going to have two crucial data points. Number one is the ISM manufacturing. Not many people have been talking about it, but in fact, ISM manufacturing has been a leading indicator for the jobs picture and the economy as a whole. And also, the markets tends to be very sensitive to ISM manufacturing. And we're expecting the reading for ISM manufacturing to be really weak, as well as the employment subcomponent of ISM will be pretty weak. And going into non-farm payrolls, we also think that the unemployment rate would remain at 4.3%. But in fact, everybody should be looking at the hundredths decimal point of the unemployment rate. It's in fact, if you look at the hundredths decimal point, it will be rising from 4.25 to 4.34 according to our expectations. Wow. So really just one bit to rounding to 4.4. So that's our forecast, though.
Okay, so if that's your forecast, and correct me if I'm wrong, you're still forecasting just a 25 basis point.
No, 50
Oh, you want 50. Okay, you're on the team 50.
We are on the team 50.
Okay, well, do you think those are figures that would solidify a 50 basis point cut in the minds of the rest of the market, or does it need to be a more pronounced rise in unemployment potentially to justify that?
Well, Powell was very dovish at the Jackson Hole speech, and he didn't mention the word gradualism or things are in balance. He just says risks have changed. He said that the size of the of the rate cut really depends on whether the labor market will deteriorate, and he says he will not accept further deterioration in the labor market. So if an unemployment rate is rising from 4.25 to 4.34, if our forecast is right, that is further deterioration. And I think that Powell would be definitely on board of a 50 bips cut on that day. So that day when the payroll comes out would be the day before the blackout period for FOMC. And it just happened that the New York Fed President, John Williams, will be speaking right after the payroll report comes out. And I think that John Williams would be the messenger for whether they would be doing 25 or 50 bips.
So try to get that signal out to the market while you can, so no one ends up surprised after the meeting, because I know they don't like to do that. As they consider the idea that their battle against inflation might be at least mostly complete, they are confident it's going back down to 2%, and that could help cut this year. It is worth noting that come January, when they, I guess, could potentially be cutting, again, we might have a different president coming into office who could be enacting, if Donald Trump gets his way, immediate tariffs on all goods coming into the U.S. How high is the risk, do you think, that actually the fiscal and economic policies of a new president could be something reinflationary, that the Fed doesn't actually get to finish the cutting cycle it began.
Very high, Kelly. Yeah. In fact, looking at the fiscal policies of both Harris and Trump, we estimated both sides will lead to reinflationary impulses. And the thing is, in the first administration of any president, they tend to want to get a lot of policies out in the first 100 days. And that is the most inflationary period in the first 100 days. That is unless we are already in a recession by then, or it's clear that we are in a recession by then.
Do you think we might be?
I think the most crucial jobs report for that, and the one that the markets will be most sensitive to, would be the jobs report on the Friday right before the U.S. election release in November, because that would be the first jobs number after the Fed cuts. And typically, if the unemployment rate keeps rising after the Fed cuts, it's pretty clear it would be a hard landing. But if the unemployment rate stabilizes after the Fed cuts rate, then we're in a soft landing. So I think that payroll report would be, I think the markets would really react to that payroll report.
Well, and I wonder how voters would react too, since it's on the eve of the election. Anna Wong of Bloomberg Economics, calling for 50 basis point cut from the Fed next month. Thank you so much for joining me on this Friday. Enjoy your Labor Day weekend. We are so close to Labor Day. Just a few more hours to go. I, of course, will be back here at 5 p.m. Eastern time for the late edition of Balance of Power, where we'll continue the conversation on the cycle, Bloomberg's new morning consult, swing state poll, Kamala Harris's interview last night. Of course, there's much more still ahead, and still ahead here on Bloomberg TV and radio. Romaine Bostick and Katie Greifeld will be here in the next hour. A reminder to our listeners in Boston and New England, starting Monday, you can find us on 92.9 FM. This is Bloomberg.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever, S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Hello, happy Friday. Welcome to Bloomberg Business Week. I'm Katie Greifeld alongside Romaine Bostick. Carol and Tim are off playing tennis once again. So it's just us.
Yeah. Exactly are they doing out there at the U.S. Open? So they're at the U.S. Open.
They are, for sure.
Out there in Queens, New York.
Yeah.
Are they working?
So I interviewed them yesterday after you went off to do your show, and they really insisted that they were, but I don't know. It was a little suspect. It was hard to get a straight answer out of them, but we have a lot to talk about. Once again, it seems like stocks, I don't know, can't really hold on to a bid here.
Yeah, it's kind of interesting. I mean, I was told that the last week of August heading into a Labor Day weekend, it's usually like one of the quietest weeks for markets. And of course, all of that changed this week, of course, with the economic data, a big earnings report out of NVIDIA. And then, of course, we get kind of heading into, I guess, this big inflection point because everybody's waiting for the Fed meeting, which is 2.5 weeks from today. I don't know if you've started your countdown. Stay here on a Friday afternoon with stocks just kind of straddling the line between gains and losses. It was still a relatively solid month for the S&P, up about 1% here. And for a lot of the individual stocks, and not necessarily led by big tech.
Yeah, no, it is important to note that this would be the fourth straight month of gains, even though August definitely felt volatile. And to your point, Romaine, it is the end of the month, so things could get wacky going into the close. You're going to have a lot of fun there, but we're going to have a lot of fun too, because we're going to talk about PCE data this morning. 8:30 a.m. got hit over the head with that, as expected. We'll discuss that with Stuart Paul in just a couple minutes. We're also going to talk about Intel. This is a really interesting one.
I am all in on this story. I mean, of course, a lot of people are really wondering sort of what the heck Pat Gelsinger has been trying to do over there. And now you have this new Bloomberg report basically saying that they're considering potentially a separation of that foundry business. I thought that was supposed to be the salvation for this company long term.
Yeah, we'll talk about all the different options that Intel is.
And you know I'm an expert on foundry businesses, right?
I assume so.
That's why they put me in here with you today.
We're also going to talk about the fruitcakes, the nutcases, and the lunatic fringe that are trading ETFs. I wrote this story that came out today. It's pretty interesting. It's about single-stocked leveraged funds. A little bit of an oxymoron there.
That sounds dangerous.
It is dangerous if you don't use them correctly. We're going to get to all of it and more. But first, let's kick things off with Amy Morris and a Bloomberg Business Flash.
All right, thank you, Katie. The S&P is on track for a fourth consecutive month of gains, despite a few poor performers. The worst of those is Supermicro Computer. Shares are down 36% for this month. A report this week from short seller Hindenburg Research claimed it found accounting red flags that sent the stock even lower. Shares of Supermicro right now 2.7% lower. Moderna, Walgreens, and Intel also struggling. Now, speaking of Intel, sources tell Bloomberg Intel is working with investment bankers to help navigate the most difficult period in its 56-year history. The company reportedly discussing various scenarios, including a split of its product design and manufacturing businesses, as well as which factory projects might potentially be scrapped. Morgan Stanley and Goldman Sachs are Intel's longtime bankers. They've been providing more advice on the possibilities. Sources say it could also include potential M&A. Shares of Intel are now 7.6% higher. We check markets for you all day long at Bloomberg. The S&P 500 is up 0.1%. NASDAQ up 0.3%. The Dow is down 0.2%. The Russell 2000 down 0.2%. And the core PCE price index, the Fed's favorite inflation gauge, came in slightly better than economists expected, up 2.6% year over year. The prediction was 2.7%. Personal spending rose from last month on an inflation-adjusted basis, even with pandemic-era savings winding down. And that is a Bloomberg Business Flash. Now back to Bloomberg Business Week with Romaine Bostick and Katie Greifeld.
All right, our thanks there to Amy Morris, and you heard her there at the end talking about that core PCE data. That was the big data point that came out this morning, 8:30 a.m. Washington time. And a lot of concern here, of course, because this is the last big inflation report, at least the preferred inflation report, before that big Fed meeting in mid-September. Joining us right now is Stuart Paul, analyst over at Bloomberg Economics, to kind of talk about what we learned this morning. And Stuart, I mean, the numbers overall look good. I mean, Amy Morris rattled off the 0.2%. I was looking at the 3-month rolling basis, which is firmly under 2%, 1.7%. I would think Jay Powell would look at that and feel pretty comfortable about where we are.
At least all the headline numbers were as good as or better than the expectations were for those numbers. As we just heard from Amy, 2.6% year on year for the core PCE index. If you look at the month-on-month values, we're running at the Fed's 2% target for 2 consecutive months. If you look at 3- and 6-month moving averages, again, we're seeing some improvement close to the Fed's 2% target. If you look a little bit under the surface, it's not as rosy. The spending that we saw was mostly just a recovery in auto sales. I mean, it seems like a lifetime ago, but in June there was a cyber attack on auto dealers that disrupted sales. I'm curious about that,
because I saw that you wrote a great piece, kind of an instant reaction on this, and I saw that it was like down the previous month with a negative sign, and basically recouped that this month. But if you strip that out, if you stripped out motor vehicle sales, what would have spending actually look like?
You still see drag in appliances. You still see moderating spending in services. Where there is spending in services, it's mostly on staples and necessities, things like housing and healthcare. So certainly not as rosy. And all of that spending that we're seeing, even where there is that bright spot like housing, like healthcare, it's being facilitated it's being facilitated by underspending. We have a 2.9% savings rate. It's exceptionally low. One of the 2 lowest readings we've seen since early 2008. While that's still possible when folks can lean on some sort of a wealth effect, if we were to see, say, a delay in cuts or the Fed under-delivering on what's expected, it's the sort of thing that could take some of the steam out of spending going forward as folks have to start precautionary savings a bit more.
You know, Katie, this is a good segue for me to remind both you and Stuart that I actually bought a car in July.
Did you?
So I did my part here.
We haven't talked about this, actually.
Those PCE spending numbers going. So, Jay Powell, you're welcome.
I signed another lease because I'm a big weenie. But anyway, Stuart, so we got the PCE data today. I want to look ahead. I want to talk about next week because we have the big one next week, and that is, of course, the NFP report, the actual employment figures. And it really feels like that's the market's focus, that the focus has shifted from inflation to the labor market. And we know that that's the Fed's focus too.
That's right. So we're expecting about 140,000 jobs added in August. We're expecting the unemployment rate to stay steady at 4.3%. So we have a bit more of a pessimistic outlook than most seem to have on the street. The thing to keep in mind is that August payrolls they systematically underdeliver on expectations. For basically 15 years, payrolls come in well below estimates, an average of about 20,000 jobs below estimates. So we should be a bit cautious in thinking about what our estimates are going to be. We should expect actually for whatever the consensus estimate is, for the Fed to be underwhelmed by what's actually printed. And where we have seen hiring, it's been mostly in the acyclical industries, again, like healthcare, education, government, and the diffusion of hiring. When you look at a super granular, as micro of an industry level as you could look at, diffusion has been declining. And so the breadth of labor market strength is diminishing.
We've also seen some softness on the wage side, and there was actually a great story today in the Wall Street Journal, one of our competitors, kind of talking about, at least anecdotally, how a lot of executives now feel like they have a little bit more power when it comes to pushing back on employees as well as new hires who are asking for these higher wages.
That's right. So one of the major indicators that we look at for wage pressures is the quits rate. When you have lower quits rates, when you have workers that have less confidence in their prospects for new employment at higher wages, you get less upward pressure on wages. Employers, as you were saying, don't feel that pressure to negotiate with employees to keep them on payrolls. And what we're also seeing is employers cutting hours for their workers. Almost the entire effect of higher wage growth and employment growth was offset by a decline in average weekly hours. just last month. And again, we think that as employers are managing headcount, managing their labor budgets, that's another factor that we need to keep in mind when we're thinking about total labor utilization in the economy.
All right, Stuart, great stuff as always. Looking ahead, of course, to those payrolls numbers coming out next Friday. That is Stuart Paul. He is a U.S. economist with Bloomberg Economics.
When you sign a lease for a new car, does that actually contribute to our economy at all in any way?
We should have asked Stuart that. I feel like
he probably would have been the better person for me to pose that question to.
Yeah, I do my part for this economy. Let's talk about politics now, because there is a new Bloomberg News Morning Consult poll. This was conducted across battleground states after last week's Democratic National Convention. And here is the eye-catching headline on the Bloomberg News write-up. Harris edges Trump in key states with Sunbelt now up for grabs. Let's bring in now Bloomberg News senior White House and politics correspondent Gregory Cordy on this poll. Take us into the details here, because reading that headline, of course, obviously I'm excited.
Yeah, so it's been quite a switch from just a couple months ago. We were talking about Joe Biden seemingly being stuck in the mud in the polls. Some months he was competitive in those northern blue wall states. That was really his only path to victory, though, to getting to 270 electoral votes. And what we've seen now is that by Harris moving up across the swing states, she's also brought all those Sunbelt states, Arizona, Nevada, Georgia, and most interestingly, North Carolina into play. And I say most interesting about North Carolina is because in April, we had Donald Trump winning North Carolina by 10 percentage points. A lot of other pollsters stopped polling there because it just wasn't that interesting. It wasn't seen in play. Now, Kamala Harris is leading North Carolina by 2 percentage points among registered voters. It's, I think, a tie if you consider the likely voters, the ones who are most likely to show up. But that's a fundamentally different map than we had a couple of months ago. It's still anyone's race. This race is still on a razor's edge. We're all still looking at Pennsylvania, but it's a lot more competitive than it was just a couple short months ago.
Give us a sense here, Gregory, as to actually what is swaying voters either in one direction or another. Is there a single issue that is sort of tying this all together, or is it disparate?
Yeah, the thing that jumps out the most is that we ask in this poll what the most important issue is, and obviously it's the economy. That's the most important issue in every presidential election since the beginning of time. But then we ask a number of different, about a dozen or so different economic issues. We ask about jobs and inflation. We ask about housing costs. We ask about wages. And on every single one of those economic issues, Kamala Harris has narrowed the gap or is now outperforming Donald Trump when we ask which candidate do you trust more on those issues, specifically on housing costs, wages, who will best handle personal debt, things like student loans and credit cards. Those are the ones she's outperforming Trump on. And the most interesting thing about that is that the perceptions of the economy haven't changed. People are still very gloomy about the state of the present economy, but they're not holding that against Kamala Harris, who has been the vice president for more than 3.5 years. The economy was the issue that bogged down Joe Biden, but it doesn't seem to be hurting Kamala Harris. It seems that swing state voters are giving her a blank slate to talk about what she would do in a next Harris administration without tagging her with all the baggage of the Biden-Harris administration.
All right, let me clarify something. When I said I'm excited, I meant as a consumer of news and someone who loves competition. So let's talk a little bit more here about the state of play, because, of course, we're talking about key swing states. We know that a lot of these states are probably going to decide the election when you put them all together. But bring us to the national picture, because, of course, Harris has momentum in the polls right now, but even a dead heat, that's not winning.
Yeah, and Kenny, I understood exactly what you meant by that, because we have been talking about this poll for months and months and months, and for many months I came on and said, well, not much has changed. And so just as a reporter, it's interesting to have some news to be able to tell people about how the race is changing. I think, look, this is an electoral college system where it's these 7 states that are going to decide it. So as much as we've all been looking at the national polls for the last couple of years now, increasingly we need to set those aside because the fact of the matter is Democrats need to overperform in those national polls in order to be competitive in the Electoral College. The Electoral College has for some time benefited Republican candidates for president. That's how Donald Trump was able to win in 2016 without winning the popular vote. And so there is certainly a lot of momentum on Harris's side, but it's going to come down to how she does in these states. And as you point out, I think a lot of these are within the margin of error. Wisconsin, she's clearly leading. All the rest are still up for grabs, and so there's any combination of states that she might be able to put together, though, in order to get to that magic number of 270 electoral votes.
All right, Gregory Cordy there in our Washington bureau with just about 60-plus days until the general presidential election here in the U.S., the latest Bloomberg Morning Consult poll out. Read it on the Bloomberg Terminal. Another story making waves across the Bloomberg Terminal is about what else? GLP-1 drugs. Novo Nordisk Wegovy reduced deaths and illness from COVID in a large study that took place during the pandemic. This is according to a report by Madison Muller, a Bloomberg healthcare reporter, and she joins us now. And Madison, is there anything that these GLP-1 drugs can't do?
I mean, it seems like there isn't, because this is just this one was kind of unexpected too, an unexpected example of the many potential health benefits that these drugs have, and more that treating obesity has actually in the interplay in different metabolic diseases.
And it's interesting because we've spent a lot of time on the air in the last couple of weeks talking about some studies coming out from Eli Lilly. Now, of course, this really good news coming out of a Novo Nordisk study as well. It almost feels like dueling data points coming out here.
Yeah, it's interesting because the drug makers Novo and Lilly are studying different things. We know Novo studied heart disease and Wegovy. We know Eli Lilly is studying Zepbound in sleep apnea. This study it's actually part of that very large heart disease study that Novo Nordisk released last year that showed that Wegovy cut heart attacks and strokes by 20%. And that study was so long that it took place during the pandemic. So scientists had an opportunity, an unexpected opportunity during that study to actually look at how COVID was affecting patients and to look at whether patients treated with Wegovy, if there was a difference in deaths and illnesses. And, they saw that the drug isn't preventing infections. It's not like Wegovy can prevent someone from getting COVID, but people who were on the drug had better health outcomes.
I am curious. This kind of brings up a whole question too, Madison. This is more of a long-term question, but it's about if these drugs do have the potential to reduce other diseases and other sort of healthcare complications beyond just obesity. Here, are we going to see a little bit more buy-in from the insurance companies, from the corporations that are going to be footing part of this bill, and from the governments themselves?
Yeah, I mean, I think that's the hope. That's a big reason why these companies are doing studies like this, because they want to convince insurers that there are these long-term health benefits and that paying for a drug that costs $1,000 a month is going to, help save costs in the long term by bringing down other health issues and by preventing other health issues. So they want to show that without a doubt, there's evidence and that there's proof that losing weight leads to these other better health outcomes, whether that's heart disease or kidney disease or liver disease or sleep apnea. And we're already seeing that Medicare has started covering Wegovy, which Medicare does not cover weight loss drugs, but it started covering Wegovy for people with obesity and heart disease because Wegovy now has that approval for heart disease. So that's just one example of what's potentially to come as these studies rack up and as the drug companies continue looking into this.
Well, it's another fascinating piece of information coming out of Novo Nordisk. Really appreciate your reporting, as always. That, of course, is Bloomberg News health reporter.
Reporting from vacation, apparently.
I know.
She
that
started
woman
her
is
Labor
not
Day
in the
weekend
building.
a little bit earlier.
Yeah.
But we thank you, Madison, for taking time out of your vacation for us.
Yeah, her background looks a little bit different than ours. Should we talk about markets?
Yeah, we can. I'm not sure there's a lot to talk about. I mean, look, on the day, not a whole lot to talk about, but it's been a relatively good month for stocks.
It doesn't feel like it.
It doesn't feel like it.
Yeah.
But it's been resiliency. That's a good word, right?
Resiliency. That's a good. I tried to use that yesterday, and then the market puked a little bit. But we'll see what happens. That'll be your problem on the close. Much more coming up. Don't go anywhere.
Well, that's right. We're wire to wire here.
I know. All right. Yeah. This is Bloomberg.
Look at that. The opening.
Billionaire Gautam Adani founded one of India's biggest and most controversial business groups. After being rocked by accusations from short seller Hindenburg Research last year, Adani is now preparing for the company's future in a real-life succession story. Meet the family members he's handpicked to take over the business as we deep dive into the facts and rumors surrounding the Adani Group. Inside Adani, a Bloomberg exclusive replays all weekend, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that we'll be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg, context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. The top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, where's the data coming from and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
It's 2:21 on Wall Street. I'm Amy Morris. Stocks climbed after the latest economic data showed the economy is holding up. But while it left the door open for the Federal Reserve to cut rates a few times this year, what was a rally earlier today then faded at the end of this wild August on Wall Street. We checked markets for you all day long here at Bloomberg. The S&P 500 up 0.25%, NASDAQ up 0.3%, and the Dow is little changed on the downside. It's down 26 points. The Russell 2000 is down 0.1%. That's about 2 points. The U.S. economy may be on the verge of a major social change. The labor market forecast to grow by 0.4% each year over the next decade, less than a third of the pace from last decade. That's historically low. And the Labor Department says the main reasons are slower population gains and baby boomers leaving the workplace. And what would help? The government says in some cases AI would fill the void. Once again, S&P 500 up 14 points, NASDAQ up 64, and the Dow is down 23 points. That is a Bloomberg Business Flash. Now back to Bloomberg Business Week with Romaine Bostick and Katie Greifeld.
All right, thanks there to Amy. Our coverage continues right here on Bloomberg Business Week, taking a look at some of the big movers of the day, and that includes Intel. It is actually one of the worst performers in the month of August, but it's one of the best performers here today. This based on a Bloomberg report that says the company is considering some strategic alternatives, and one of those alternatives could actually be splintering off its foundry business. Ian King, one of the reporters on that story, and he joins us now from our San Francisco bureau. And Ian, let's get right to it here. I mean, this is a company, and a CEO for that matter, that's really been struggling for a turnaround of this company. I was under the impression that that foundry business was a key component of that turnaround.
It absolutely is. It's central to Pat Gelsinger's plan to have Intel not only produce its own chips, but to expand its market opportunities by producing chips for other companies. The reason why some kind of a separation or a further separation might make sense is because if, who is Intel going to go after as a customer? The answer is a lot of the companies like NVIDIA, like AMD, that are already, frankly, its biggest competitors. So why would they give Intel business? Well, if it's no longer part of Intel, maybe it becomes more attractive as a manufacturing partner.
I mean, Ian, is it safe to say that splitting up the foundry from the rest of the business would be the nuclear option? What are they considering short of actually doing that?
Yeah, that's a very good question. I mean, we should be clear here that everything that we mentioned was within the context of this being at a very preliminary stage. Pat Gelsinger was speaking at the Deutsche Bank conference yesterday, and it's clear that for now he's going ahead with the plan that they have. But, you know, there are other options along the way, such as spinning off some of the other units, such as dialing back the investments, which they've already really done, and not going ahead with some of the factory projects that they've announced.
I am curious. I mean, this is a company, of course, that had a great deal of government money committed to it as part of an initiative by the Biden administration to try to onshore more of our chip-making capabilities. How would a potential spinoff, and again, this is obviously hypothetical at this point, but if they were to do something like that, separate from this company, does that affect in any way the deal they have with the government?
100%, but what they're doing already affects the deal they have with the government. As a taxpayer, we should be happy that what the Commerce Department has done is say, yeah, oh yeah, you can have this amount of money, but you have to meet milestones along the way. You have to build a plant. You have to get the first wafers out. You have to get all of these signposts that Intel has to pass before it actually gets a dime, and that's already in place. So whatever the future is for this set of factories, that's kind of in place, and what it does will determine how much it gets rather than perhaps who owns it.
And Ian, I'd love to just sort of step back here and talk about how we got to this point, because you think about Intel, it's really been quite a fall from grace when it comes to their position in the competitive landscape, and it's kind of amazing that we're even, you know, talking about this news, that the fact that Intel is discussing its options with bankers right now. How did we actually end up here?
I mean, it's reassuring that somebody as young as you has that perspective, because I thought it was only old people like me remembered this. Yeah, no, I mean, as long as I've been covering the chip industry, which is, you know, more as Scarlett likes to point out, multiple decades, Intel has been by far the most dominant company. And more immediately, as recently as 2021, it was 3 times the size of NVIDIA in terms of revenue. So that's abrupt. The problems that it has and how we got here really came under Gelsinger's immediate predecessors. They scaled back commitments. They made the wrong technology choices. Pat Gelsinger, you know, not whether it's sympathy or not, was put in a difficult position, came in with an ambitious plan, and unfortunately, the money that's required to bring that plan about just isn't there anymore, right? So, and that's the situation we're in.
All right, so to kind of wrap this up, Ian, I mean, give us a sense here of kind of what's the next step here. I saw in the reporting that you did that there is a board meeting scheduled for sometime in September. When do you think we might actually hear something publicly from the company about its long-term plans?
Yeah, I mean, that's to be decided. I think, you know, this board meeting, as far as we understand it, is not the kind of make or break, decide on the absolute future of Pat Gelsinger and Intel in one day kind of thing, but you know, they will consider a range of options. I think what will determine how quickly this goes will be how the financial situation progresses, whether Intel feels like it's going to run out of money for the absolute largest extent of these plans quickly enough. That will really determine the path, and they really need a win. They really need a big customer, and that might cause hope, and that might cause them to stay the course.
All right, Ian, great to speak about this with you. Of course, fantastic reporting, fantastic scoop from Ian King and Team Ian out there on the West Coast. Let's switch gears here and talk about something entirely different. It's actually my favorite thing in the world. We're going to be talking about ETFs right now. Specifically, we're going to be talking about single stock ETFs. You think about the late Jack Bogle. He was the father of the first index fund. He hated ETFs. He said that basically these vehicles, they only incentivize trading among, this is a quote, fruitcakes, nutcases, and the lunatic fringe. And then you think about...
Was he wrong?
Well, now there's a whole generation of ETFs that some critics say are being designed to do exactly that. And let's talk about it now with Bloomberg Intelligence ETF analyst James Seyfert joining us from Princeton. And James, first of all, set the scene for us. Single stock ETFs. I remember when these launched, I had to spend a lot of time explaining that, no, this isn't an oxymoron. These actually exist.
Yeah, I mean, it's really a trend that we've seen in the broader ETF world as a whole. It's a package trade. So there's some ETFs out there that go long a basket of stocks and short another basket of stocks, or do anything along those lines. You have covered call ETFs. This is kind of the same thing, except it's just doing an inverse or leverage version of individual stocks. So 2x NVIDIA, inverse NVIDIA, and really what it does is it kind of gets around the margin requirements on some of these brokerage platforms. You can just click trade. Sometimes it's a more efficient, capital efficient way of putting on a trade. So it's basically allowing anyone who's investing or using these things to get institutional like margin and low cost to put on a trade like that.
The question though, I mean, who asked for this, James? I mean that in all seriousness. I mean, was there a lot of demand, people clamoring for this kind of stuff?
Well, I mean, there's a need. The 2x NVIDIA ETF is over $6 billion in assets, wow. Charges over 1% in fees. So there are people out there that love this stuff. And ironically, these things were around in Europe long before they were around here in the US. So when we saw a bunch of issuers filing for these things a couple of years ago, the place I looked to see how are they being used is in Europe. And basically, they're kind of like lottery tickets for these issuers. So they're launching a lot. They're kind of throwing spaghetti at the wall, and whatever sticks, they're sticking to. And they're high fee, high cost. A lot of times people aren't in them very long, so the fees don't matter too much. But if you get hundreds of millions or even billions of dollars in these things, that's a lot of revenue for these issuers. So there are people out there that want them. There are people out there that are using them. Is there some downsides to them? As Jack Bogle would say, 100%.
Yeah, well, let's talk about that because I've sort of coined them as one-day only funds, meaning that you're not supposed to hold this long-term. Really, you shouldn't really be holding this for longer than a single day. So talk to us about what happens if you were to buy this and sit on it for a year or so.
Yeah, so ironically,
NYMEX diesel September futures settle at $2.25. Gasoline September futures at $2.21. Natural gas October futures at $2.12.
You would get double the return of what the S&P 500 does over the next month. But these funds, these leverage ETFs, they reset every single day. So you're dependent on the path of return. So if it goes up, down, up, down, up, down every single day, you'll actually underperform the underlying market potentially just because of the way that leverage resets. So every single day, you're only going to get that daily return. So for the most part, people using these things, they're only going to use them for a day, maybe a couple of days.
NYMEX WTI crude October futures settle at $73.55 a barrel, down $2.36, oil 3 spot on 1%.
That said, the data shows for the most part, these things are being used as designed. There aren't that many people. They're trading so much compared to the amount of assets in the fund that there's no way there's that many people out there that are just sitting on these things for a year. Are there some out there? Potentially, but for the most part, people are using these as designed and they're trading them a lot. These things are trading a lot.
Has there been any regulatory pushback?
The SEC, when they approved these things, kind of basically said, we don't like this. They fit within the rules that we've set out there for the ETF rule, but they're not fans of them. I think, in my view, my personal view, I think these make sense, right? There's the ETF tent, the tent for ETFs can be very large. We can allow these super cheap beta products that are nearly free, and we can also have these fringe, highly tradable, highly leveraged type products out there. I think if you want to protect investors, the protection kind of probably has to come at the brokerage level in the way that like not everyone can just get a margin account. You might need to do something where you are going to ask people, if you're trading these things, do you understand what this is? Do you understand what's going on before you click buy or sell, what have you? I just think it makes sense. They satisfy the requirements, and honestly, they're working exactly as designed. Mm-hmm. There's no real questions like, are they doing something that they're saying are they not doing the things that they're saying they're going to do?
All right, James Seyfert of Bloomberg Intelligence, really appreciate the insight there. And you take a look at markets. I feel like we should, counting down to the close on the final trading day of August. As you said, the final trading day of the month.
I host a show called The Close.
I've heard about that.
Where we take everything to the closing bells. You refer briefly
it's like
part of that.
A fever dream.
It's a fever dream. But look, this is a market, of course, that has been searching for direction, but that direction has continued to be higher. Maybe not the strength that we saw earlier in this year, but enough for a gain in the month of August.
This is Bloomberg. It's too bad. smoothing it out, and this was just another fever dream.
I know now. And then,
Ladies and gentlemen, we have arrived in Philadelphia. Local time is 3:05 p.m. and the temperature is 67 degrees. At this time, you are now free to use your cellular devices.
You know that feeling when you get to turn your phone on after the plane lands? You can have that feeling every time you drive. Make sure your cell phone is stowed away whenever you are behind the wheel.
Visit StopTextStopWrecks.org, a message brought to you by the National Highway Traffic Safety Administration, Project Yellow Light, and the Ad Council.
1 in 3 adults has prediabetes. 1 in 3. That means it could be you, your football buddy, your football buddy, or you, your best man, your worst man, you, your dog walker, your cat jogger. While 1 in 3 adults has prediabetes, with early diagnosis, prediabetes can be reversed. Take the risk test at doihaveprediabetes.org. Brought to you by the Ad Council and its prediabetes awareness partners.
There are some moments only the forest can inspire. Find yours at discovertheforest.org.
Brought to you by the U.S. Forest Service and the Ad Council.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste. I think this is also how I grew up, making your own clothes and making something that's very special and very unique. It's like timeless. And now you see that everybody is looking the same, like wear sweatshirts and wear t-shirts. And for me, it's just like, when they wear something that's special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally?
Definitely.
Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough to ensure that it is sustainable. That's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
It's 2:40 on Wall Street. I'm Amy Morris. The core PCE price index, the Fed's favored inflation gauge, came in slightly better than economists expected, up 2.6% year over year. The prediction was 2.7. Personal spending rose from last month on an inflation-adjusted basis, even with pandemic-era savings winding down. August is on pace to be a blowout month for Walmart, and maybe a disastrous one for its competitors. Consumers are reining in their spending. Shares of Walmart surged some 12% in August, on track for their best month since October of 2017, adding roughly $64 billion to the company's market capitalization. A stronger than expected second quarter earnings report, fueled by price-conscious shoppers, drove that advance. Shares of Walmart right now 0.8% higher. A new study finds Wegovy, the weight loss shot from Novo Nordisk, reduces the risk of death from COVID in obese patients. The findings in the Journal of the American College of Cardiology provide a deeper analysis of Novo's largest Wegovy trial called SELECT. That showed that patients on Wegovy were 20% less likely to suffer a heart attack or stroke than those on a placebo. How the drug might help other COVID patients, still not clear. Shares of Novo Nordisk are 1.7% higher. We check markets for you all day long here at Bloomberg. The S&P is up 0.4%, NASDAQ up 0.5%. The Dow is little changed on the downside, and the Russell 2000 little changed on the upside. That is a Bloomberg Business Flash. Now back to Bloomberg Business Week with Romaine Bostick and Katie Greifeld.
All right, our thanks there to Amy. It is Friday, August 30th, Katie Greifeld. And you know what that means? End of summer is here. The Labor Day weekend here in the U.S. Kicking off where everybody hits the road. I know you're going to hit the road to go somewhere, right?
Going straight to New Jersey, the most popular place to be.
For some people, it might actually be here, but we've already seen some of the data out for people traveling this weekend, and it is high. Remember, we're already having a record summer here for travel, and now the TSA is actually expecting 17 million people to come through their checkpoints over the Labor Day weekend here. There's also expected to be a huge jump in people on the roads, and AAA saying that bookings, travel bookings, at least through its own platform, already up by double-digit percentages. Paula Twydale joining us right now. She's the Senior Vice President of Travel over at AAA, joining us today from beautiful Boca Raton, Florida. Paula, great to have you here on the program. I think we're all kind of excited, just for a long holiday weekend, but a lot of people have already taken to the roads, they've taken to the air, they're already enjoying their weekend off to a start here. What are we expecting on a percentage basis to see relative to last year in terms of the number of people traveling?
Well, you're certainly right. People have taken to the roads already, and it's going to get busier as the afternoon unwinds. So, domestic traffic alone is going to be up for travel 9%. So that's a good sizable amount from last year, close to double digits. The cost of domestic travel has gone down 2%, so it's making it a little bit more affordable. People are taking advantage of some of those lower flights right now, lower costing flights. So they're all getting out this weekend.
Well, let's talk about how they're actually getting out, what method of transportation they're taking, because you talk about this, blockbuster travel season for this summer, and you wouldn't necessarily know it by looking at the airlines, for example. They've warned of miscalculating summer demand when it comes to flying. I mean, is it safe to assume people are just driving more? What are you seeing when it comes to the actual comparisons when it comes to driving?
Certainly a little bit of both, but this is a kind of weekend because it's a very condensed period of time that a lot of people will take to the roads. They have control of their own destiny. They're going to get out there quickly. They're going to enjoy that 4-day weekend. They're going to try to stay as long as they can on the Monday. So you can expect the traffic to be heavy again Monday afternoon, even into Tuesday. But, you'll have significant amount of people also going through the TSA as TSA predicts because, the domestic airfare, like I said, is down 2%. So consequently, people are taking advantage of these low airfares, going out to places like Las Vegas or New York or Chicago, Denver. Heading out to all these destinations is more affordable right now. And certainly on the roads, gas prices are a little bit lower. We're hitting around $3.35 on a national average. And, that's about 50 cents less than it was last year.
All right. Well, some people are staying close to home. I mean, Katie's just going to the suburbs for the weekend here. But what about international travel? I'm just curious to see how that's held up relative to all the domestic travel that we've been talking about this summer.
Ironically enough, it's held up pretty steadily because it's only off about 4%, but the cost of international travel is up 11% from last year. So that's a sizable jump in cost, and people are still going. And the real winner is Europe, because those destinations in Europe, which is London, Paris, Rome, Athens, Barcelona, those are all the sweet spots right now. And you're going to see a lot of people still traveling in Europe. That's the lion's share of international travel. But 11% cost is pretty high over last year because last year was also expensive. But it's not a deterrent. We've only had a little bit of fall off at that period of time.
Have I told you that I went to Paris for the Olympics?
I heard you went to Paris for the Olympics.
I sort of shouted it around this building. I would say that international travel to Europe, just based on what I saw, absolutely booming this summer. You also highlight Alaska cruises. What's going on over in Alaska?
Well, Alaska's been extraordinarily popular. I think it's the bucket list destination that people love to put, out there. And there was a lot of inventory in Alaska, so it really boomed this year. Cruises overall did wonderful. AAA, we're up 12% in cruises over last year, and last year was still a banner year for cruises as they started to come back. They were the last ones to come back after the pandemic. But Alaska's such a great destination, and the peak
Brent
season
crude
is the
futures
summer.
settle at
So you're getting just to the end of it now in
$78.80 a barrel.
September.
That's down
And, people have already
$1.14 or
booked for next year for Alaska. So if you're
1.43%.
thinking about going, you're thinking about 25, but maybe even 26 to go to Alaska.
Yeah, I've thought about going to Alaska. I just wish it was a little warmer there.
Yeah.
But, yeah. I am curious, though, when we start to talk about these bucket list destinations or really just any sort of major travel that people have planned, once we get outside of this summer season, obviously you get maybe a little bit of a lull. Obviously that picks up a little bit in November and December around the Thanksgiving and Christmas holidays. Are you anticipating that we're going to continue to see the type of strength that we saw at the start of this year, that's going to continue through the end of 2024 and into 2025?
Absolutely. I don't think you're seeing too much letting off the pedal in terms of traveling internationally or elsewhere. I'm making a trip myself in October, and it's still extraordinarily expensive. And generally, September, October starts, the shoulder season airfare. And then, of course, it starts to hit low after December, and then you get into January. So you're starting to see some relief in pricing. So people are still taking advantage of that. The dollar is still strong. And, the destination is great. And everywhere in the world, we've had such warm weather that, of course, going a little bit off shoulder, off season makes it more attractive getting around, especially if you go into Europe and those places. Some of the places don't have air conditioning the way we do in the United States. So it's a great time to go. I don't think you're going to see any tail off of that booking yet because people have booked so far in advance. The question will be what it will look like going into next year. Of course, what we call wave season, which is the beginning of January to March is wave season for heavy booking for cruises, but also getting ready for the entire year for travel.
And when it comes to this travel industry that we're in right now, what does booking in advance mean? I mean, has that definition shifted when you're trying to plan out your airfare and dealing with high prices? I mean, how long in advance do you actually have to book now?
Really depends on the product. If you're taking just a trip for air, you don't have to book that far in advance. You want to make sure that if it's limited inventory, if it's a destination that you don't have a lot of nonstop flights or something like that, based on where you're coming from, you may have less selection, so you may want to do it a little earlier. But sometimes waiting a little bit longer, closer in, can help you as well. We're seeing the trends change a little bit. Certainly pre-pandemic, it was a lot different. People booked further out, especially for bigger tour products and more comprehensive programs, because they lock in early and they get that done. Because if it's prime time, like Alaska, you book early to Alaska because it's such a limited window of opportunity. So it really depends on the destination, the type of product. Are you doing an all-encompassing, an all-inclusive tour? Or are you just taking an airplane trip someplace and staying in a hotel? Then you don't have to book as far in advance, because there may be some flexibility or sales. And also seasonality makes a difference. If you're flexible and you have the discretionary time, you want to change the days of the week that you're traveling, so that you're not going with mainstream with everyone working. Everyone's out at a certain amount of time, so you really want to plan ahead and be constructive of how you make your reservations, so you don't have to be as far ahead as you normally did years ago.
All right, great advice, and really appreciate you taking time for us. Have a wonderful, wonderful Labor Day weekend. Paula Twidale, Senior Vice President of Travel over at AAA. I'm not really feeling Alaska. What's your bucket list trip that you want to take in your life?
The answer is New Jersey, but
New Jersey.
Yeah,
that's like right there across the bridge.
I want to die in New Jersey.
Okay.
What's your bucket list?
Mine is actually Tierra del Fuego down in kind of the tip of the lower end tip of South America there.
Yeah, we have to do this more. I've learned a lot.
So mine's a little further away than yours. It's going to take a little more planning than getting out to New Jersey.
Same sort of thing. This is Bloomberg.
Arch has laid plenty of groundwork for future revenue, but for now, Mark Messler's most pressing challenge as CFO is conserving capital.
You have to have the short-term discipline to sort of circle the wagons around cash. I mean, cash is oxygen. I know where every ounce of cash is going, but we also have to be nimble around that as well, because things change by the day.
Archer went public in 2021 in a reverse merger with a SPAC, Ken Moelis's Atlas Crest Investments. Through August 2023, the company raised over $1 billion from investors including Stellantis, Boeing, United Airlines, and Cathie Wood's ARK Investment Management.
Does that ARK investment open doors for you to bring in different kinds of institutional money going forward?
It does. I mean, I think there's a lot of credibility that comes in with an investor like ARK. As I think about, my top targeted list of investors over the next 2 to 3 years, an investment like that gives us some credibility and gives us a little bit of staying power as I go in and talk to other investors.
With the SPAC pipe now closed, Archer's facing a new phase of raising capital.
I know the folks who aren't willing to invest right now may have large pockets of investment in the future. So I want to be in front of them. I'm wanting to show them progress. I want to create credibility with them that we are marching towards our goals of commercialization.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Now, your company news headlines on Bloomberg Radio.
From Bloomberg in Washington, I'm Amy Morris. A new study finds Wegovy, the weight loss shot from Novo Nordisk, reduces the risk of death from COVID in obese patients. The findings in the Journal of the American College of Cardiology shows that patients on Wegovy were 20% less likely to suffer a heart attack or stroke than those on placebo. Shares of Novo Nordisk are 1.7% higher. Walmart is looking at a blowout month, a $64 billion gain in August as its rivals flounder. Shares of Walmart surged 12% for the month, on track for the best month since 2017. Walmart has managed to lure more bargain hunters, especially the wealthier ones, leaving rival discounters like Dollar General and Big Lots struggling to meet their targets. Shares of Walmart about 1% higher. The S&P is on track for its fourth consecutive month of gains, despite a few poor performers. The worst of those is Supermicro Computer, with shares down 36% for the month. A report this week from short seller Hindenburg Research claimed it found accounting red flags. That sent the stock lower. Shares of Supermicro Computer right now about 3% lower. Moderna, Walgreens, and Intel also struggled. And now, speaking of Intel, sources tell Bloomberg the company is working with investment bankers now to help navigate what is the most difficult period in its 56-year history. Intel is reportedly discussing various scenarios, including a split of its product design and manufacturing businesses, as well as which factory projects might potentially be scrapped. Morgan Stanley and Goldman Sachs are Intel's longtime bankers, and they've been providing advice on the possibilities, which sources say could also include potential M&A. Intel shares right now are about 8% higher on the news. And those are the company stories that we are following for you at this hour. I'm Amy Morris, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio and Television.
All right, welcome back to Bloomberg Business Week. I'm Katie Greifeld. Let's take a look at markets quickly right now, because we have a little bit of a reacceleration in the S&P 500, currently up about 0.4%, as Romaine Bostic so kindly told us over and over again. It is the last trading day of the month, so we could see some funny business going into the closing bell as people dress those windows. We'll continue to keep an eye on that. But the reason that I'm in this chair right now is because Carol Masser and Tim Stenevec are out at the U.S. Open. I'm still trying to suss out what exactly you guys are doing there. I think I have a pretty good understanding from our conversation yesterday. But Carol, who do you have coming up today?
Whoa, hey, hold on. What I'm doing is I'm watching tennis.
No, we're
Carol
going to get
texted
to
me
you,
like 20
Tim.
minutes
Don't
ago
worry.
saying, "Are you okay?" She said, "Are you okay?" Because I wasn't on set yet. And I was like,
where
I'm finishing up. Yeah, I was watching Coco in her third set.
And I really want to ask you, is New Jersey, I mean, I was born, bred, love, still live in New Jersey.
That's her bucket list.
But that's on your bucket list?
Yeah, that's her bucket list.
Really?
Well, you know, I try to set my goals at an achievable level. I know I'm going to New Jersey tomorrow, so it's nice to just tick that one off. Okay, Tim.
I love that there's somebody else who loves the Garden State.
Yeah. Well,
Sorry,
Tim,
Carol,
I
please,
know
go
that...
ahead. Who do we have coming up?
Okay, go ahead. Come on, you guys.
It's hard, I know, sometimes. Listen, we've got a couple of, first of all, our Bloomberg News team. We have a lot of folks who love the U.S. Open, including Molly, who's here. She's going to talk about economics and some of the data today, so we're going to get into that because... Are we going to talk tennis?
Yeah, of course we're talking tennis with her.
So we're going to talk with Molly, Molly Smith, of course. We're going to talk tennis. We're going to talk with Ira Boudway about private equity increasingly getting into youth sports activities.
Yeah, and John Wertheim is going to join us. There's pretty much nobody, apart from Molly Smith, nobody out there who knows more about tennis than John Wertheim. He's going to be joining us in the 4 o'clock hour. And I don't know, everybody should be like listening to and watching Bloomberg Business Week for the next 2 hours. But if you find yourself watching tennis, big match coming up on Red on Arthur Ashe, which is like right in front of us. We can't see it, but it is Ben Shelton and Francis Tiafoe, 2 Americans, 2 friends, going head-to-head. It's what everybody here is talking about.
Katie, one other thing I want to mention, we have the CEO of Tenabot. So for those who play and practice, there's a cute little robot that can like clean up all the balls for you. If you don't have your own ball boy
there's always
or
an AI
ball
angle.
girl, there's always an AI angle.
Always an AI angle. Glad that extends to the tennis world as well. And Tim, in 45 seconds, I know nothing about tennis. That's not a secret. But I understand there was a big upset last night that maybe you weren't actually there for?
I wasn't here for it. I rushed home after the broadcast, but Carlos Alcaraz, who won in 2023, he has been upset in the second round. It's a really big deal that he's actually out. I mean, a lot of people thought he could take it all the way and win again this year.
Who did he lose to?
Molly?
Essential of the Netherlands.
I spent a lot of time watching YouTube videos of pronunciations earlier today, so I'm going to make Molly Smith do it.
We spent so much time prepping, like, all right, how do you say this name? How do you say this name? That's what's fun about it. It's just global, international. It's players from around the world.
The way to
it's so
say
much
it is
fun.
to have Molly Smith be the one who says it.
With a nice, easy name like Molly Smith.
Yes.
She's our U.S. Open chatbot, ChatGPT. She really is.
All right, well, I'm writing all of this down. I'm learning a lot about tennis. You guys have a great program coming up. Another quick check on markets. You take a look at the S&P 500. Like I said, not quite at session highs, but getting there. You think about the volatile week that we had. NVIDIA earnings, the market was resilient until it wasn't with that 6% drop in NVIDIA yesterday. It's a different story today for at least right now. Of course, green on the screen if you take a look across broad markets. But that does it for me. If you're sticking with us, of course, Carol and Tim are on radio. The close coming up next on Bloomberg TV. Have a great weekend.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. This is the close.
PCE data hits the mark and Wall Street traders hit the road. From Studio 2 here at Bloomberg headquarters in New York. Did you like that?
Yeah, I did.
I'm Romaine Bostic.
And we're here, of course. We didn't hit the road yet.
Yeah,
I'm Scarlett Fu. Alex Steele did hit the road. She's off today, but we're kicking off to the closing bell here in the U.S. This is where things stand. Another day of modest moves, basically wrapping up a week in which the S&P 500 did not close higher or lower more than 0.6%. So we're well within that range. However, you look at the Magnificent Seven recovering from a 4-day sell-off, up 0.9%. NVIDIA, in particular, rebounding from a sell-off sparked by its insufficiently bullish outlook. We're looking at sharp declines in NYMEX crude. In fact, it just deepened. It's now off 3.33% for WTI at $73 a barrel. Several officials within OPEC Plus do expect production increases to go forward this year, and we are seeing Treasuries decline. That is pushing yields up. And so when you look at the spread between the 2-year and the 10-year, what's happening is it's continuing to steepen, and that gap is now just under 2 basis points, moving towards a normal positive slope, Romaine.
Yeah, of course, as we head into that Labor Day weekend that some folks have already headed into, fitting to take a look back at the month was here on the last trading day of August, a soft end, if you will, to an otherwise solid month for global stocks, a rally that largely occurred without any meaningful contribution from the Mag 7 or from chip stocks. Each of those two groups posting declines on a monthly basis, and that actually might be a good thing. Signs of better breath for a broadening rally amid bets that the Fed has tamed inflation without tipping the economy into recession. In fact, just this morning, we did learn that the Fed's preferred measure of underlying U.S. inflation, that so-called core PCE, advanced last month by 1.7% on a 3-month annualized basis. That's the slowest pace this year. That same report also showed inflation-adjusted consumer spending accelerating. That should check a key box for Jay Powell and the prospects for interest rate cuts starting in 2.5 weeks' time.
To me, this is a pretty good mix of data. Now, there are those downside risks, of course. You know, the unemployment rate's much higher in that last report. So we have to watch these things closely, particularly in the labor market. But overall, I think a pretty good tone of data.
And as far as the individual stocks moving today, you have some interesting players out there. Some big losses for some of the discretionary names like Ulta and Royal Caribbean, but outsized gains for old school tech like Dell, like Hewlett-Packard, and Intel. Intel actually rallying the most intraday since 2022 on the back of a Bloomberg report that says CEO Pat Gelsinger is considering strategic moves that could splinter off its foundry business, a division, Scarlett, that had been both sort of an in-the-moment albatross for the company, but also was supposed to be that bright spot long-term.
Yeah, well, it's proving to be a bit of a bright spot today, at least these reports. But let's go back to the overall price action in stocks, which continue to make new highs. It just depends on how you slice it, right? The yellow line tracks the 67 infotech companies in the S&P 500, and it's up 43% over the past year. But the group has never fully recovered from that sell-off in early August. That's compared with the S&P 500 itself, which is in blue, which has gained considerably less than the tech names since last August, but it's about 1% shy of its all-time high. And definitely in contrast with the S&P equal weighted index in white. Clear laggard here, only up about 19% for the past 12 months, but it is setting new highs. That's a clear sign investors see more prospects for upside in other sectors outside technology. For instance, like financials and industrials, Romain.
Yeah, absolutely. Here, as we kick you off to the close, we remain with that focus on the macro. We talked about that PCE data we got this morning. We get a big jobs report in about a week's time, and now we're learning some companies already front-running that. Goldman said to be cutting over 1,300 jobs, or about 3 to 4% of its workforce. This according to a report by the Wall Street Journal. According to that report, Goldman cuts have already started, and they will continue through the fall. It says that the cuts are part of an annual review that cuts low performers. Again, the headline number, though, here is about 1,300 workers, or about 3 to 4% of the workforce over at Goldman Sachs. This, according to a Wall Street Journal story. We're going to get you some more details on that, and I'm sure we will return to that story before we get to those closing bells. We do want to stick, though, on that broader topic, that broader theme, really, about the health of the economy and how it folds in to the positioning that portfolio managers are making. Joining us right now is portfolio manager and senior analyst over at Westwood Management, Miss Lauren Hill. Lauren, thanks for being here on the program, and really kudos to you for working this day before the Labor Day weekend when everyone else is hitting the road here. I do want to get your take, though, on economic conditions, because as a portfolio manager, you obviously have to have an eye on the macro. And the narrative for the last few months has been the macro is at least resilient, if not exceptional. Do you expect that to change?
This remains. So as long as unemployment remains intact, I think that the economy will continue to hum along. We are seeing some weakness, though, within consumer discretionary. Consumers, in particular, are starting to really increasingly seek value. We heard that from dozens of retailers the past couple of weeks during earnings season. They're also trading down, delaying purchases, and going without in order to just maintain slightly tighter budgets.
Well, that's what I'm curious about, because when we looked at some of the earnings reports that we got over the last couple of weeks from the retailers, probably the one that stood out, of course, was a commentary by Dollar General that seemed to suggest that what you just said, the low-income consumer really is retrenching. When you look at middle-income consumers and then even go up a little step above that to some of the kind of higher net worth individuals, are we seeing softness there as well?
Yeah, not from the high-income folks yet, but the inflation that we've had over the past 4 years started to lean on the lowest-income folks a couple years ago, in fact. And so there was actually a back-to-school shopping survey that came out in July, and the intention for the lowest-income folks was to cut their spending 4% this year, and that's because they had already tightened last summer. What's interesting that's happening right now is that middle-income group is now joining them in the belt tightening, so that group's intention was to spend 9% less. And so from the survey from parents, they thought that the big cuts would be more in the high-ticket items and the more discretionary items such as tablets and laptops, but we actually saw a really strong comp from Best Buy, up 6% for that category. So that remains essential for school-age children and off to college kids. So we're really seeing a little bit more pressure more on the apparel and footwear side.
So given all of this, Lauren, how are you adjusting your portfolio with this kind of bifurcation of how the consumer is spending and where they're spending their dollars?
Yes, that remains a very important theme. And so the names that are more exposed to that upper income consumer continue to have steadier results. And then those kind of in the middle income are starting to feel that pressure. So that's a group that we've really avoided. We've been positioned a little bit more towards the highest quality names that are also trading at very good values. We continue to really like Walmart. There's, just certain names that really stand out to us as long-term market share winners in this environment where consumers continue to seek value.
What's the number one question your clients have for you when you talk to them about how the market is likely to shape up through the end of the year?
Yes, our clients are concerned about the consumer. A number of them own large real estate portfolios, have exposure across different income groups. So they really come to us to get that broader picture and to understand, the 40,000-foot view of what's going on in the economy, and then also to talk about their portfolio and their equities. So we've been telling them about the different themes that we're seeing with the consumer and the shifts in the spending, mostly by income cohort this cycle.
So kind of put this all together for it, Lauren, because mostly everyone pretty much assumes we are at the precipice of a rate easing cycle that will start at the Fed's meeting on September 17th, 18th. If they're doing that rate cutting against the backdrop of inflation that appears headed towards 2%, a relatively resilient consumer, but with everything that you've just talked about, this idea of softness approaching, should they have started cutting earlier?
I think they should have started sooner, but the Fed goes off the data, so we'll see how things progress. But really, the key to me is employment. So as long as unemployment's not rapidly rising, I think we're going to be in really good shape as an economy, as a country. But if we start to see unemployment really tick up, just as consumers aren't shopping to as great a degree and management teams are forced to protect their margins with layoffs, I don't think that anyone laid off is going to be so easily absorbed and find that next greatest job.
Yeah.
So hiring is really, really the concern this cycle.
All right, Lauren, great stuff. Lauren Hill, portfolio manager and senior analyst at Westwood Management down there in Dallas. And just a reminder, we do, of course, get that big monthly jobs report 1 week from today, an unemployment rate that, at least for now, still holding at 4.3%. Coming up here on the big program today, well, we're going back in time to the 2000s, why one analyst is saying Abercrombie & Fitch has had one of the strongest turnarounds in retail history. We're going to talk about it in just a second.
Plus, European football, the NBA, now the NFL. What's next? Little League? We're talking about institutional investors and how private equity is increasingly investing in the lucrative youth sports sector.
And for those of you still sitting in your offices watching us, well, what are you waiting for? Get out there on your planes, trains, and automobiles, because everybody is hitting the road for the Labor Day weekend. We're going to check in with Becky Blaine, travel industry editor over at The Point Sky. All that and more coming up in a bit. This is The Close on Bloomberg.
Treasury yields extend climb on heavy month-end futures volume.
Up-to-the-minute political news, whenever and wherever it happens. I'm Joe Matthew at the Democratic National Convention in Chicago, and this is Bloomberg.
Billionaire Gautam Adani founded one of India's biggest and most controversial business groups. After being rocked by accusations from short seller Hindenburg Research last year, Adani is now preparing for the company's future in a real-life succession story. Meet the family members he's handpicked to take over the business as we deep dive into the facts and rumors surrounding the Adani Group. Inside Adani, a Bloomberg exclusive replays all weekend, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Is today's PCE data point a sign that markets are in a Goldilocks environment? If you look at core PCE, which is, of course, the Fed's favorite gauge for inflation, it did come in line with expectations for July month over month and just a tick lower than expected on an annual basis. The good results seeming to set the stage for an imminent rate cut from the Federal Reserve. So here now to give us her perspective is Courtney Schubert, economist with Macro Policy Perspectives. So what's your take, Courtney? Are we in a Goldilocks environment with this latest batch of data?
I think so. PCE inflation data, as you said, came in mostly in line with expectations, which is encouraging for the Fed that the Q1 spike in inflation data that we saw has mostly reversed now. And actually on a 3-month annualized basis, PCE inflation, core PCE inflation is now back to where it was in June 2020. So that's really exciting. And the consumer still appears to be pretty healthy. We actually saw, pretty strong real goods spending in July. And, the economy is not falling off a cliff. It doesn't appear to be overheating, but like you said, the Goldilocks scenario for inflation is happening. It's moderating at a, relatively benign pace.
I know no one wants to hang a mission accomplished banner just yet here, but how does this influence investors' sentiment heading into next week's jobs report?
I think it should be encouraging and affirming too. So we've already heard from Chair Powell at Jackson Hole that the Fed is, the time has come for policy to adjust. And so, we know that the Fed is paying attention to the inflation data, but they'll be responsive to labor market weakness. So the Chair Powell has communicated that. And so once we have the data next week, I think it should give the Fed confidence to go ahead and begin adjusting policy to a more normalized rate.
I am curious. I mean, when you look at, based on the data that we have now, and I'm talking specifically about the labor market data, and you look at some of those rolling averages, Courtney, is that painting a picture of a labor market that is still in favor of the worker, or has that balance of power shifted a little bit back to the employer?
Sure. So I think, we are definitely seeing some moderation in labor demand. Our firm does a scraping of earnings calls to see what firms are saying about their hiring and layoff plans. And we've seen that hiring plans have definitely slowed, right? So there's not as many job openings as there used to be compared to like a year ago or 2 years ago when the labor market was really hot. Right. So, employers are being able to take their time and to be a little bit more picky with hiring now. So there's definitely a number of dynamics that are shifting.
So what does that mean then? When we talk about an rate easing cycle coming off of 5.25%, I wonder how far can the Fed go? I mean, we're not returning to zero bound rates, or are we?
Well, I think wherever neutral is, we're not there. We know that policy is currently restrictive, right? And so when policy is restrictive, the labor market is not going to be normalizing or stabilizing, right? The whole point of having restrictive policy is that it's going to slow down demand. And so we think the Fed has pretty good room to cut. We're expecting, at least a steady sequence of cuts this year and probably early next year to take the edge off, right? So that way we can see, once the Fed gets, takes 100 basis points off the policy rate, for example, then they might be able to go at a slower pace. But it really depends on labor market data. Inflation data is back into a more normal range. And so the Fed can really pay more attention to the labor side of their mandate.
When I look at the Economic Surprise Index, and here I'm pointing to Citi's Economic Surprise Index, it's currently at the highest since about mid-June. The thing about these surprise indexes is that we know they self-correct. When economic data beats analyst estimates, then economists tend to ratchet up what they expect, and then it goes in the other direction. Have we gotten to that point yet where economists are feeling more and more confident that, the data might actually undershoot what people are expecting?
I think in particular, the labor market data in July was really kind of shocking for some people, right? It was much lower than consensus was expecting. And so I think there's, we have to pay attention to that. And, if there's some noise, some storm effects, we can build that in as payback moving forward. But we have to also look at, the unemployment rate has consistently been rising. And so we have to take at least some signal from that. And then I would also say that, for the Fed, in responding to that, we're already at lower levels of inflation and higher unemployment than they were expecting earlier this year, right? And so that gives them room to go ahead and move rates lower too.
All right, Courtney, great stuff. Courtney Schubert, economist with Macro Policy Perspective. A closer look here at the core PCE data that came out this morning and a closer look ahead to what we might get out of the labor market data 1 week from today. Meanwhile, there was some interesting data that came out, Scarlett, about U.S. labor market growth long term. The expectation is that we're going to see growth of about 0.4% a year through 2033. Here's a catch, though. That's less than 1/3 of the pace that we had in the preceding decade. You worried?
So wait, what changed though? Are we aging? Is that part of it?
Well, it's population growth. The population growth is slowing. Basically, yes, people are aging out, and not only if younger people are coming into or being born or coming into the workforce, and that's going to be a potential drag on labor force participation.
You wonder how much immigration then factors in and what policy comes out of whatever administration takes office next January.
Well, I'm glad you brought that up because this is kind of the thing nobody really wants to talk about, that the labor market strength that we've been seeing over the last few months, a big part of that has been immigration related. Of course, I don't think you're going to hear any candidates on the trail tout that just yet.
And it's not necessarily always showing up in the data either.
Yeah, absolutely. All right, when we come back here, we're going to take a closer look here at one of the better turnarounds that we've seen for a retailer in history. Abercrombie & Fitch, remember them? Well, they're back. They're doing it like no other retailer, at least according to the analysts over at Citi. We're going to talk to that person in just a second as part of our top calls. That's coming up next here on The Close on Bloomberg.
We felt strongly that there has been an opportunity for there to be an experience on mobile that is centered around gamers. Like, we talk a lot about how there's 3 billion gamers in the world. 2 of those billion play on mobile, and half of those actually play on mobile and they play on another device. But there isn't actually a gaming platform and store experience that is centered around players and goes truly across device, where who you are, your library, your identity, your rewards, that travels with you versus being locked to a single ecosystem. And we've recognized that opportunity for a long time, but we wanted to make sure that anything we built was really grounded in people who play those mobile native games and the creators of them. And so being joined with a team that has real deep expertise in mobile was important to us.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday at 5 a.m. Eastern. Bloomberg. Context changes everything.
All right, let's get a view from the sell side with our top calls. The big movers on the back of analyst recommendations. And we start off today with Marvell Technology, the diversified chip maker receiving some good market reaction after boosting its third quarter outlook. Rosenblatt keeping its buy rating, but lifting its price target to 120 from 100. The idea here that Marvell can better capitalize on AI demand. Those shares having a phenomenal day, up about 9%. Next up, let's take a look at CrowdStrike, upgraded to buy over at HSBC. We talk about that global IT outage in July. Well, the analyst over there says that's now, quote, behind us. He says the security company's outlook implies robust growth trends ahead and its long-term prospects still intact. Those shares up about 1% on the day, and we should point out, going to close out the month of August higher by 19% despite the earlier sell-off. And let's end things here with Kohl's. More style, more savings may not be resonating with middle-income consumers. That's according to Oliver Chen over at TD Cowen, saying that the challenges in the retailer's core apparel and footwear branches could continue to impact pricing and promotions in the second half of the fiscal year. He's downgrading Kohl's to hold from buy. The shares, taking a leg down by about 3% here on the day. And those are some of our top calls. All right, we do want to stay in the retail space here because one retailer that doesn't seem to be struggling with its consumer appeal, Abercrombie & Fitch, one of the best performing retail stocks of the year, up more than 60%. Citi citing 10 reasons why the company's turnaround story and sales momentum earned it a buy rating today. The man behind that rating joining us right now, Paul Lejuez, head of America's consumer discretionary sector over at Citi. Paul, this has been a phenomenal story. We've spoken with the CEO, Fran, a few times here, trying to get some insights on how she did it. I guess the question I have for you is, how does she keep this going?
Well, I think what Fran has done over at Abercrombie is remarkable and is one of the best turnarounds that we've ever seen in the history of retail. You have to remember that this was a low single-digit EBIT margin business prior to the pandemic. Even as recently as 2022, this was a low EBIT margin business, low single digits, and she has really got her finger on the pulse of the consumer. You know, retail sometimes is as simple as getting the fashion right on a consistent basis and matching that with the right marketing message. It's not easy to do, but that is what she's been able to do over the last several years. It's been just an unbelievable turnaround story that we really are so impressed with what they have done. And we think the best is yet to come. You know, as good of a performer as it's been, we think it's still headed much higher, and we think the pullback this week has given investors an opportunity to buy this stock.
Okay, so Paul, you give 10 reasons, and number 7 on your top 10 list is balance sheet is pristine, no debt. Talk a little bit about that, because of course the growth that Abercrombie & Fitch has shown is exciting. Will the company be tempted to take on debt, or need to take on debt to sustain that growth rate?
No, not at all. They are extremely free cash flow positive. They've got a free cash flow yield in the high single-digit range. That's our forecast for the next several years, high single-digit yield annually. They just paid down the remaining debt that they had. So really they're not showing any signs of taking on more debt necessarily. And what we really are excited about is we think that this big cash position that they've got building, we estimate about $1.2 billion in cash by the end of the year, combined with their strong free cash flow, is going to allow them to become a lot more aggressive from a share repurchase perspective. So we expect that to be a bigger part of the story over the next several years and really help drive mid-teens EPS growth over the next several years.
I'm sure there are a lot of retail companies out there, Paul, that would love to have their version of Fran Horowitz come on board here. We talk about Abercrombie & Fitch being one of the best retail stocks this year. One of the worst is Lululemon, and we got some results out of them the other night. I know you cover this company here. What can fix their problems right now?
Yeah, I mean, we're neutral rated on Lulu. You know, they've run into a bit of a rough patch. I think, the history is important. They really benefited from a shift towards athletic and athleisure during the pandemic period.
Right.
But I think closets are somewhat full with that sort of product, and there's been a wallet shift more towards the fashion that Abercrombie is selling. So I think it's just a matter of wallet share currently, and at some point, maybe the trends go back towards athletic and athleisure, but right now, trends are out on their side.
Yeah, especially with the wide-legged pants, that's really popular. Paul Lejuez over at Citi, thank you so much. Coming up, we'll talk about private equity looking into youth sports. This is Bloomberg.
How can you have dinner with friends without hinting
what you're thinking about. And do you ever get suggestions from your friends at dinner, this is what you should do? And how do you respond when they kind of say, maybe you should lower interest rates? You just keep eating or what?
You might define the word friend to mean doesn't ask you about interest rates. So, no, people don't do that generally. You know, people I don't know will always say, hey, cut rates. Somebody said that in the elevator this morning.
Did that influence you or no?
I said, thank you, sir. You know, and no, but I mean, you know, people say things, but you know, it's fine.
So in some parts of the society these days, people are making decisions based on something called artificial intelligence, AI. Have you thought about, you know, calling up ChatGPT and saying, you know, here's all the data we have. What do you think about would be a good idea? Have you ever thought about that, or they're not going to likely do that?
We haven't done that. I mean, we have done little things like we've asked ChatGPT to generate questions for the press conference. And I'm happy to report for any journalists who are here that the questions were not as good as the ones we get from real journalists. So,
what about my questions? How do they compare to my questions? Okay.
No comment.
Right, so they weren't that great. Okay.
The names that move markets are on Bloomberg.
Don't expect we're going back to zero, because zero was the product of huge global shocks. I think to get to there, something really bad has to happen that we're not currently expecting. So it'll be somewhere obviously in between. I think we've made a big point of saying policy is currently restrictive, so you can deduce from that it will be lower than where we are today, but I think it's very clear that we're not going back to zero.
Bloomberg. Context changes everything.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the
Just about 3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Scarlett Fu.
I think we're the only two people in New York City still working right now, Scarlett.
We are definitely feels like in this office.
Yeah, we should point out, obviously, we're heading into the Labor Day holiday weekend here in the United States. This is also the final trading day for the month of August. It's been an interesting month here. I mean, major indices holding on to some modest gains. The S&P up about 1% here. One thing I thought that was interesting about it is that you didn't really see the huge Mag 7 stocks lead that charge this month. It was names like Kellanova, Fortinet, Starbucks, Clorox was up 20% this month.
Yeah, it's a complete shift from what we had seen earlier this year.
Yeah.
And it really speaks to how investors see more value in other kinds of companies outside of the AI space.
And it was interesting, too. We talk about some of those big names. Of course, one of the Mag 7 is one of the worst performing stocks of the year, and that's Tesla. They're also down here in the month of August. But some news crossing the wire just now that maybe actually might help the stock perk up. That robo-taxi that Elon Musk has talked about forever. Well, according to our reporting, he's finally going to unveil it on October 10th at an event in Burbank, California, on the Warner Brothers Discovery's movie studio lot. This according to people familiar with the matter.
He has a flair for showmanship. You know, do it in Hollywood, right? That makes a lot of sense.
Yeah, well, it'd be interesting. I mean, obviously, this was one of the big barn buster stocks. It's been on the back foot, probably because he hasn't really articulated a long-term plan for new models and new releases. So maybe on October 10th, that could potentially change.
There's still a long time to go before October 10th as well. You talk about big winners. Some of the big winners this week was the handful of private equity firms that got the green light to invest in individual NFL teams. But the buck doesn't stop there. PE is also drawing up plays to capitalize on youth sports, which is booming, with annual spending of at least $30 billion, according to the Aspen Institute.
So in the CFTC data, speculative traders turned short dollar for the first time since February.
To have their kids compete athletically. Joining us now for more on the youth sports industry and private equity's role in it, Tom Ferry, founder and executive director of the Aspen Institute's Sports and Society program. Tom, it is so good to speak with you. You know, that $30 billion figure is actually at a minimum, and that's how much people spend annually on youth sports. What does the growth trajectory of that look like over the past, I don't know, say 30, 40 years? I imagine it's like a hockey stick.
We don't have exact numbers on it, but it has been like a hockey stick. What happened was
in the 1990s, the travel team industry really became a thing, starting with Disney's Wide World of Sports in Orlando. And since then, we've seen the growth of these what are called megacilities around the country, which has powered youth sport tourism, wringing lots and lots of money out of many families out there. So it's been huge. We'll see what the future.
Hedge funds also turned net long Euro for the first time since
Private equity
June.
is taking a good close look at youth sports as well. Can you give us a sense of just how big a presence PE has in youth sports versus, say, mom and pop businesses? Are we talking like a 20-80 split or something more like 40-60?
I mean, PE is new to youth sport. Youth sport has been dominated by the local mom and pop. So only in the past few years have the private equity firms actually gotten into the space. And we'll see what they do. I mean, we're going to see more and more of this going forward. There's going to be consolidation. So whatever that percentage figure is, it's going to grow, and it'll grow significantly.
Where does that money actually go, Tom? I mean, what's the breakdown here? I mean, is that money going directly into the leagues, or is it going into training facilities that are kind of independent of that? Where?
Well, I mean, if you're, and I was one of those travel team parents. If your kid's playing soccer with a club, it's usually a $2,000, $3,000, maybe a $5,000 registration fee to that local club. But then you have the weekend tournament. So that's where you really amp up the dollars. The hotels, the air flights, the gasoline, the meals on the road.
Yeah. Yeah, you know, I mean, I'm as someone with a teenager who's going through this right now, Tom, I definitely feel you. And let me just state for the record here, it's a lot more expensive than $2,000 to $3,000 than maybe what it was back in the day. I am curious, though, as to what this could potentially mean for the kids and their parents. Are they going to be able to share at all in this potential upswing in money coming in, or is this just more just play like a kid and maybe you profit from it once you make it into college and into the pros?
Well, I mean, the whole industry is based upon this idea that if you invest in children in a significant way, you give them high doses of sport starting at 6, 7, 8 years old, then your kid's going to have a chance to play in college and maybe have a chance to play in the pros. Now, what happens is often parents get to when their kids in like 10th, 11th grade, and they realize, oh, there's actually not a whole lot of payoff here. There's not actually a whole lot of scholarship money waiting for my kid. Maybe there's preferential admission to a selective college that can be leveraged, but the real return on investment is what sport does for a kid's life. Are they more connected to their friends? Are they, is it protective against mental health? Does it, create an active lifestyle? That's what parents and kids should be focused on. That's the real return. So.
I like the way you put that. So that's a real return for parents and families who are shelling out all that money. What's the return for institutional investors who are then going into it? Because PE firms tend to have a timeline of 3 to 4 years, then they got to show a return on investment. With the money that's coming in to youth sports, how do you see that changing the experience for families and as well for the industry at large?
Look, I mean, I think private equity could either be the best thing for youth sports or the worst thing for youth sports. It'll be the worst thing if private equity comes in and says, okay, well, let's do what we usually do with a lot of industries and try and cut costs and wring as much money out of the space as possible. Because they're going to be trying to pull more and more money out of a smaller and smaller group of parents who can afford this experience. It'll be a good thing if they come in there and they apply professional management and they lift the standards with which coaches are trained, program standards in terms of age-appropriate play, et cetera. I'm interested to see if they have the intelligence, the imagination, and the patience to expand the number of kids who are experiencing sport in this country and building business models off of that.
All right, Tom, great stuff. And this is a real fascinating case study, I think, for a lot of us who are parents and have kids of a certain age. Tom Ferry is a founder and executive director of the Aspen Institute Sports and Society program. And I don't know how I feel about this, Scarlett. I mean, I know youth sports isn't really youth sports like it was when we were kids. It's big business, but to kind of see private equity get in this, it just kind of feels, I don't know.
Well, I mean, there are a lot of things that they could improve upon because if it's individually family-run businesses, there's a lot of efficiencies. A lot of these youth sports leagues are not technologically advanced in any way, right? Like, I mean, sending out schedules is a nightmare, for instance. So maybe like little things like that can be improved on the back end.
Yeah, and you seem like they make us like go on these little apps to get into the tournaments, and they're all like off. I think it's like literally, it's like designed on like a MySpace platform.
There you go.
You know, 20 years ago.
We've all felt the pain.
All right, coming up here, we are going to talk tech. We are going to talk Intel, and a big scoop by Bloomberg News that Pat Gelsinger, the CEO over there, looking at some alternatives to kind of goose the stock price, and that could mean a separation of its foundry business. That discussion coming up after the break. This is Bloomberg.
Earnings. I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything. Top names at Jackson Hole are on Bloomberg.
I'd like to see us move toward a more real-time data set. So using new technologies, maybe some of the AI technologies, maybe we get better data as we move forward, but we've got to really focus on that with our economists and our analysts about, you know, where's the data coming from and can we rely on it?
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
To be a value investor is to pay less than the business is ultimately worth. And if the price 2 years from now should be considerably higher than it is today, the stock is likely undervalued.
Time now for our stock of the hour, and it is Intel having its best day going back to October of last year on the back of a Bloomberg report that says Pat Gelsinger looking at some options here to try to create some value for the company. Ian King joining us right now, the sage of covering this company out in our San Francisco bureau. What exactly, Ian, does Gelsinger have planned?
Yeah, what we've reported is that, and you know, it's important to stress that this is very early days, that the company is going to discuss a number of options that are a departure from its current policy. Those may include a separation of its two main businesses, products and manufacturing, and then it may well scale back some of its expansive plans in terms of building new factories.
Well, that's what I'm curious about, because all of the chatter over the last couple of years has been about the money that Intel has gotten from the government, or at least committed to by the government, the idea of doing more manufacturing here, and the idea that Intel would be a focal point of that. If the foundry business is spun off or separated in some way or another, does that alter those plans?
Yeah, I mean, it obviously does. I mean, anybody who's been listening carefully would have heard Intel say the sort of the magic words, which is, hey, we'll build according to demand, we'll build capacity out according to demand, which is a traditional way you do things in the chip industry. You build a factory shell, and then you only put the expensive equipment in there when you're sure that you can actually have that equipment working, because it's so expensive. The government are obviously aware of that, and they're not going to give Intel any money until it does what it said it was going to do.
Ian, with your decades of covering the chip companies, first in Asia, I know you covered.
Calling him old?
No, I'm just saying he's experienced.
Oh, okay.
I am old.
You covered Samsung Electronics of Korea, TSMC of Taiwan, and now Intel. I mean, these were the big chip makers of their respective countries and of the world. Yet we've seen Intel fall behind quite a bit. What was the thing that Intel didn't do to keep up?
Yeah, and people are talking about, Gelsinger's future here, but I think it's important to remember that he inherited a very difficult situation. The problems that Intel has right now are the result of decisions that were made by his predecessors, technology decisions, what they were going to do with manufacturing technology, the choices that they were making with regards to where they were emphasizing products, and all of that has added up to a situation where we're in now, where we need a lot of money to revitalize this company's technology, but we have less money because the products that we're selling right now aren't as good as they should be.
Yeah, it creates a moment of truth for Pat Gelsinger. What is your confidence that he will be around to see through whatever decision the company makes?
That is something that the board will have to decide. I think, broadly speaking, people believe that he came up with the right plan. He's just been unlucky in a lot of regards, and also the timing of everything. I mean, people want returns, they want a sign of progress much more quickly than we've seen. At the moment, there's a sense that things are actually getting worse. That's a very difficult situation to be in as a CEO, regardless of whether it's your fault or not.
This gets to the question too, Ian. I mean, this has been a year where we've seen activist investors really come out the woodwork for a lot of companies. I know there's been already a couple that have kind of kicked the tires on Intel. Does Pat Gelsinger really need to prepare himself for more?
Good question.
Well, the typical activist playbook is slash and burn, right? You come in, you see an undervalued asset, and you somehow force the management team or replace the management team to create value, and that there are cost cuts and everything else involved. That's not what the problem is with Intel. The problem with Intel is, if anything, it needs more money, it needs more investment. So who's to say? I mean, look at the share price. Of course, that represents an opportunity if you're an activist. Yeah. But are they going to be there and give Intel the money it needs?
Yeah, all good points. Intel shares up 8.5% today, but for the year, it's down 56%. Ian King joining us from San Francisco. Thank you so much.
Company's 56 years old, too.
Yeah.
Symbiosis here. I am curious, though. I am serious on the activist thing, because, I mean, this is like ripe for it, right? I mean, when you start to hear this, and you're talking about a guy who's coming up, I think, on his 4-year anniversary as CEO at the start of next year here. So a lot of questions here about what needs to be done.
Absolutely. All right, we're counting you down to the closing bells with Mark Newton, Managing Director and Head of Technical Strategy at Fundstrat. We'll get his take on whether tech needs to lead this market higher. This is The Close on Bloomberg.
what's happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever, S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something?
So we're just less than a minute until we get the market on close data.
This is your full-time job. Just buy the index, and you're going to be okay.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
So taking a look at the market on close imbalance, the S&P 500, that's 6.5 billion to the buy side. NASDAQ 100, 2 billion to the buy side. Dow 30, 2 billion to the buy side. And the Magnificent 7, 1.1 billion to the buy side.
Welcome back to The Close. Romain Bostic here alongside Scarlett Fu. We want to get back to that breaking news on Tesla that we had just a little while ago. Bloomberg reporting that the EV maker is now prepared to unveil its highly anticipated robo-taxi. Elon Musk setting up an event at the Warner Brothers movie studio lot for October. Dana Hole joining us right now to talk a little bit more about what we know. Dana, what actually do we know about this event?
Well, not a lot. I mean, we knew that the event had been postponed from August to October, and that was a scoop that Tesla confirmed on its last earnings call. But we were trying to figure out where, and we were able to report today that it's going to be at the Warner Brothers studio lot in Burbank. And there's a lot of reasons I can think of as to why this might be, but that's the big news today is just that this event is going to be there.
So the big event is going to be there. Tesla, if I recall correctly, moved its headquarters to Austin because Elon Musk says it's a better place to do business, but he chooses to do a lot of his big showy unveils in California. What does that say about his approach?
Yeah, well, it's important to remember that Tesla's design studio has always remained in Hawthorne in Southern California, and automotive history is very much part of California history. A lot of the designers that work at Tesla are still in Southern California, and LA is where you have like high production value people. A lot of big events are done in LA, and so I think it makes sense for this robotaxi, which is all about kind of innovation in the future, to happen here in California.
I'd be remiss in not pointing out that Musk has taken the stage before with some of these prototypes for various things. Of course, we all remember that robot that wasn't actually a robot. I guess, how real is this going to be? Meaning, once he unveils this thing, assuming it does happen in October, when do you think that thing will actually be on the road, we'll be able to touch it and get into it?
I think it's still going to be quite a while. What's interesting to me is that, you know, if the Warner Brothers lot is a private lot, so this is not a public road. So whatever they are unveiling, this you know, prototype, this product launch, this demonstration of its capabilities is happening on private land. So they don't actually need like a permit because they're not testing on a public road. So I think it's going to be quite a while before we see regulatory approval and, you know, and a whole ride-hailing fleet.
All right, Dana Hall there with the breaking news on Tesla, set to finally unveil a prototype of its robo-taxi sometime in October, according to people familiar with the matter. There's some other breaking news also involving Elon Musk and his other company, X. That service, of course, the company formerly known as Twitter, has now been suspended in Brazil. Of course, there's been a long-running dispute there between Elon Musk and Brazilian authorities that has now resulted in X being suspended in that country. We should point out, though, Scarlett, Tesla shares right now are hitting session highs. In fact, stocks across the board right now hitting session highs as we get closer to those closing bells.
Yeah, I was taking a look at this. You have the S&P 500 now up 0.9%. I was going to say that it was going to be another day of modest moves, but that's no longer the case here. And it's a move across the board higher. And you can see a lot of green there with the NASDAQ 100 outperforming, up by more than 1%. Treasuries are still lower. You can see the 10-year moving up by 5 basis points. And that's been a trend all week long, with the long end moving quicker than the short end.
But you're seeing volume pick up there. And obviously some of this is probably just a little bit of that to sort of month-end closing out trades, putting in new ones here, as you typically see at the end of a monthly period.
All right, so let's talk a little bit about where things stand at the end of this week and month. And welcome Mark Newton. He is Managing Director and Head of Technical Strategy over at Fundstrat. So Mark, interesting that we get a day in which there's not a whole lot of trading activity, given it's a Friday before Labor Day, and you have markets moving to their highs of the session. What is the sentiment? What is the mood of the market right now as we head into a long weekend in which things should start to pick up in terms of headlines, in terms of you know, any kind of corporate announcements in the following days?
Yeah, thank you. Look, it is a week that's very reminiscent of a pre-holiday week. I mean, markets have been very range-bound throughout the entire week. I think both bulls and bears are sort of disappointed. But I would note that we do have 5 sectors that are set to make new all-time monthly high closes as of today, so the end of August. And so I think that's very impressive. We see, you know, industrials, healthcare, financials, utilities, and also technology. Tech, of course, was hit hard during the early part of the month, but has managed to rally back. I think that's very encouraging. When you talk about sentiment, you know, we have slowly but surely gotten a bit more optimistic, and that will be something to watch as we get into the so-called seasonally bearish month of September. But during election years, you know, September is really not as bad as advertised. Typically, it's a better month than October. So I don't necessarily think it's a time to, you know, sell and go away like you do in May. I think, if anything, we need to see evidence of these trends starting to break down before investors should get a little bit more cautious.
You mentioned technology in your breakdown of the different sectors. If you look at the S&P 500 Infotech Index, it has not yet recovered to the levels it was at before that early August meltdown. How critical is that for the S&P 500, the market cap-weighted S&P 500, to be able to reclaim its record high?
Look, the eco-weighted S&P has already moved to new all-time highs, and I think that's important. It is important for technology to continue to perform well. However, like in the last month, it's lagged, but all these other sectors have rallied to pick up the slack. So if those sectors do not do that, then the market certainly would have, you know, some consolidation of some sort. But, you know, at 30% of the S&P, tech is still the area that's really most investors are focusing on, of course, and with NVIDIA this past week. Notable, though, that markets really can seem to rally through that, even with NVIDIA having stalled out a bit. So, yes, it is important, but as long as financials and healthcare, which both hit new all-time highs this week on an eco-weighted basis, I mean, that's about 25% of the market, then we're still in good shape.
Yeah, financials sitting on about a 4% gain for the month of August. Healthcare, 5%. Consumer staples at the top of that list, Mark, by 6%. I want to go down to the bottom of that list. When you look at the main S&P sectors, the S&P 500 Energy Index down about 2%, and we're seeing a lot of commodities still under pressure here on a daily and weekly basis. Any chance of a turnaround in that sentiment around these stocks heading into the rest of the year?
You know, I tend to be a little bit more pessimistic on energy. I think both of you look at from a Democratic and also Republican side, you know, there is pressure to keep inflation lower and to ramp up U.S. output in a way that crude will fall. Potentially, we could have more output kicking in the next month with OPEC plus. So technically, the trends have started to turn a lot more negative for energy, and really, it's an underperformer and really an underweight in my view, technically going into next year. So that would be an area I would likely avoid. Plenty of great sectors, but that's one that really, if the economy, and it has started to weaken ever so slightly on the fringes, starts to weaken more, that likely would be negative for commodities. And my thinking is that, the demand picture, particularly with what's happening in China, very well might not materialize as strong of a fashion, and that could put weight on crude as well.
Is there a sense here, Mark, that when we talk about what the market is looking for, and whether it's the macro data or the moves by the Fed, or maybe better or at least more sustained corporate fundamentals, is there any sense here that everyone is kind of on the same page, or have we sort of reached this point in this market rally, this market cycle, where everything is splintered off, everything is idiosyncratic?
That's a great question. Look, I think that increasingly investors have become more confident with what the Fed is doing and its recent pivot, and I think that is very constructive, but also it's a sign not to get too complacent for the Fed to have a pivot at this stage of the rally. We'll have to wait and see in that regard. It's still a lot of moving pieces. I would argue that recently we've seen some evidence of the dollar trying to bottom out, and also Treasury yields. And those have been important reasons why, stocks have been able to rally. Bad news has been good news for the market. Now, if the economy continues to falter, I would think that continued bad news in the economy is not always going to be good news for the stock market. So that's going to be something to watch. I think we could have a temporary reprieve where, rates might bounce and the dollar bounces a little bit, but the trends are very bearish for both heading into next spring. And so I think that's still going to be a source of positivity, I think, for risk assets.
Mark, appreciate you taking the time, particularly heading into a holiday weekend. Be well. We'll talk to you in September. Mark Newton, Managing Director and Head of Technical Strategy over at Fundstrat, helping us count you down to those closing bells. Less than a minute to go here. Stocks hitting session highs. We should point out bond prices hitting session lows here as volume picks up here at month end.
Yeah, interesting that volume would pick up on a day like today before a long weekend. September, by the way, has been the biggest percentage loser for both the S&P and the Dow, going all the way back to 1950. October gets a bad rep, but September is actually worse.
Yeah, absolutely. I was looking at the stock
market almanac.
Yeah. And yeah, it doesn't necessarily bode well. But remember, there were some months earlier this year that the almanac said we're going to be good, turned out to be bad, and vice versa. So maybe that changes at all. We do get the closing bells here in New York, heading into a holiday weekend, and there is clapping and cheering. And in fact, that screen looks a lot different than what it was going to look like just a few minutes ago. A Dow Jones Industrial Average higher on the day by roughly, I can't actually see that, but roughly by about 0.5%. The S&P higher by 56 points or 1% here on the day. The NASDAQ composite up about 1.2% here on the day. And we should point out all three of those names now posting gains for the month of August. Let's take a look at the Russell 2000, higher on the day by about 0.7%. But we should point out, Scarlett, for the week and for the month, it is in the red.
Okay, well, like you said, the picture really changed in the last 15 minutes or so, because until then, we had seen a steady ratchet higher in the major indexes, but in the last 15 minutes, they really took off. So when you look at the sector performances here at the S&P 500, it's a spinach pie. I'm going to change from pesto pie to spinach pie. Pretty much 23 out of 24 sectors. I'm sorry?
It's like spanakopita.
There you go.
Yeah.
There's a little bit of chili, there, and that's the tech hardware. Yeah. The tech hardware and equipment index is in the red just barely, but for the most part, you have gains all around. When you look at the best performers in the S&P 500, it is consumer discretionary up 1.9% on the day.
All right, as we continue to break down everything that happened in the markets on the day, on the week, and in the month, let's bring in Amy Orr, who helps to lead our equities coverage here in the U.S. Today, Amy, where we saw the S&P close higher, more than 400 stocks in the green.
Yeah, and one of the big gainers is Intel. We've been talking about it the whole day because our colleagues Ian King and colleagues in San Francisco have been really good in breaking the news about its plan to actually split off its foundry business, which hopefully will turn around the business slightly. It's been really performing really bad. For the year to date, it's been down 57%, but then for today, it's up almost 10% now.
I know you cover a lot of M&A, and is this something that people talk about, whether Intel might be a target in any way? away or whether people want to buy parts of it?
So for the month, the Dow was up 1.8%, the S&P 500 up 2.3%, and the NASDAQ up 0.64%.
With deals and ways to actually unlock value. And then we've seen not even just in chip makers, but also like J&J, it spun off as Canview last year, and which has been doing well. So there are values to be unlocked from just splitting off some part of the business.
What else are you looking at?
I'm looking also at Lululemon. Well, yeah, the yoga kind of pants maker has also, like, it gained earlier on, but then it gave up some of the gains. Well, with its sales and profit outlook being lowered, but people are still saying it's very achievable.
But what was the issue here? I mean, we got their earnings report, and I know there were some concerns here about margins, about sales growth, et cetera. But I've always felt this seemed to be kind of like that Teflon stock, right? It was just, it didn't matter what they charged, what they made, how bad they're. Remember when they had those like see-through leggings that they had to like go back on?
Different
but people still kept buying the stock.
That's very true. The branding is very strong, especially international. Overseas kind of business has actually gained while the U.S. business has kind of been flat. So that's also the reason why people are kind of like, maybe it's not so bad. Well, especially in a time where we're not even sure whether we're heading into recession or not. So people are just being conservative at the moment.
Also, they have not caught on to the baggy pants look.
The baggy pants look? Is that back?
Yeah, well, you have a teenager. Have you seen what his friends are wearing?
Everything is
I've seen what he's wearing, and it hurts my soul all the time.
Everything is back to the 90s and like 2000s, right? So that's also the reason why Abercrombie is also like back in the news again, because it's staged the
shout
best
out to the
turnaround.
90s. Absolutely.
Yeah.
Did you save all your Abercrombie and Fitch from like when you were younger?
I can't fit
now
that
you would have been.
I know.
So this is the real turnaround story in retail, right?
Well, hopefully, because fashions come and go, but it does seem like it's here for stay for a little bit. And then like with all the minimalism and all that, like, people are really going back to the classic looks of the 90s, and then just sleek and
I just listen to 90s music. I don't actually wear the 90s clothes.
You don't have to put the 90s clothes on to listen to it.
I don't know. That would be a bridge too far.
So I've been doing it all wrong, because I just put on like my troop sweatsuit and the Dookie chain and the Kango, and I just walk around the house.
Especially a bow tie on a Friday before Labor Day holiday.
I got to dress this as a Tom Key Memorial bow tie. Rest in peace, my friend. All right, you got decliners?
I have decliners. Let's see if they're actually declining at the end of trading today.
He's not actually dead, so just nobody email me on that. He's alive and well.
He's taking a break. He's resting right now, as he should after a long week. Let's take a look at Supermicro. Yes, it is down on the day, resuming its decline, and it closes out August as the S&P 500's worst performer for the month. I mean, what hasn't gone right for this company this month? You have allegations of accounting problems by a short seller, a delayed 10K filing, which Supermicro blamed on needing more time to assess internal controls.
And Amy, I mean, this was like kind of for a short period of time was kind of like the darling AI stock. I mean, not quite an NVIDIA, but I mean, it didn't like rally like 100% or something in like a span of a few months.
Started to fall.
Yeah, and then it actually tapped money through convertible bond market as well, and then we're all like, it's very rosy as well. But like as we've seen over the past 2 weeks, like the AI story is kind of like on shaky grounds now.
Yeah, absolutely. All right, let's take a look at Elastic. This stock held on to its losses, off by 27%. It's an enterprise software company, cut its full year revenue forecast, leading to a downgrade from Bank of America. I was looking at it. It's incorporated in the Netherlands, but based in the U.S.
But we've seen a lot of these enterprise software companies and application software companies definitely underperform over these last few months. And in fact, I think when you look at the tech indices here, that's been a big part of the drag.
Yeah, because AI story is actually hurting some of the software companies. If they're not keeping up with the AI story and not adopting it, they might actually lose out.
Yeah, well, I mean, gone are the days where you could just throw the words AI into your press release and get that pop, right? Alnylam Pharmaceuticals, ALNY is the ticker here. That's another big decliner. 8.5% drop here.
This was crazy.
Yeah, the full results from a drug trial showed its treatment for a form of progressive and increasingly fatal heart disease disappointed investors.
Right, but it was also the data point, the previous data point they get was actually in error. So they had to effectively correct that. So it kind of caught a lot of investors off guard who thought the data was a little bit better here. I do want to turn real quickly to the yield space here because there was actually a lot of activity there. And I think, and you probably know this, Amy, this is going to be a big factor heading into September with the Fed, everyone anticipating this rate cuts here. We did see modest increases in yields on the day. We're now at 3.9 on that 2-year yield and right around 3.9 on that 10-year yield. But on a monthly basis, you actually had some pretty good returns here. And I wonder what the correlations are right now between what we're seeing in yields and what we could potentially see in equities once the Fed does indeed make good on what everyone thinks they said they're going to do.
Well, it's really boils down to data, right? Right now, because we're definitely going to have one cut in September, but how aggressive it's going to be really depends on the data. And then, like, if it's going to be very aggressive, it really puts us into the recession mode, which is not a good space to be in. And sometimes, like, technically, rate cuts are good for equities, but if it goes into recession territory, then it's going to hurt a lot of businesses. Then that's not a good look.
Anything that takes investors by surprise gets people thinking, what does the Fed know that we don't know? What is it acting on that we're not confirmed on just yet?
Yeah, and we should point out too that we talk about this potential for a recession. Obviously, a lot of that ties into consumer spending. There was a great story out today with the interview with the executive over at MasterCard, how they want to get rid of kind of basically the card itself, so more like biometric stuff and tokens and things like that. I don't know. Are you like the kind of person who still swipes your card, or do you use a phone, or what?
I use my phone all the time. That's why I don't bring my wallet, and it kind of like bites back on me sometimes. But then that's also the competition, right? Because the whole financial industry is going through an kind of earth-shattering kind of like shakeout. So essentially, with all the new kind of technology, so we don't really need to actually have a card. And these days, there are technologies where you can swipe on the street if you just have your card with you. So like that's for protection, but also like easier for you to spend money.
Yeah, well, whatever to reduce friction, right? You know, at some point, you could someone will scan your eyeball and you can purchase something.
Well, I would say, have you been in like Whole Foods lately? Some of them, they have this, you just do your fingerprint, your palm or something on it.
What did you buy when you were there?
Well, I use a regular food, Scarlett. What do you, what? What do you, see, this is what I have to deal with, Amy. Anyway, thank you for joining us. Amy Orr, who helps lead our equities coverage here at Bloomberg, helping us break down all the market moves on the day.
What a good sport. She, gave us 3 gainers, and it helped that the market rallied into the close. I'm just relieved that the decliners I picked out actually stayed lower.
Absolutely. All right. Well, Amy is actually going to hit the road right now, as a lot of people are already out there traveling for the extended 3-day weekend here in the United States. We're going to check in with Becky Blaine. She's a travel industry editor over at The Point Sky. She's going to update us here on just how much traffic we're going to see out on the road later tonight. This is The Close on Bloomberg.
In tech are on Bloomberg.
A large number of countries are subsidizing their regional data centers so that they could become able to build out their AI infrastructure. They recognize that their country's knowledge, their country's data, digital data, is also their natural resource. Not just the land they're sitting on, not just the air above them, but they realize now that their digital knowledge is part of their natural and national resource. And they ought to harvest that and process that and transform it into their national digital intelligence. And so this is what we call sovereign AI. You could imagine almost every single country in the world will eventually recognize this and build out their AI infrastructure.
Nobody covers technology like Bloomberg. Context changes everything. Billionaire Gautam Adani founded one of India's biggest and most controversial business groups. After being rocked by accusations from short seller Hindenburg Research last year, Adani is now preparing for the company's future in a real-life succession story. Meet the family members he's handpicked to take over the business as we deep dive into the facts and rumors surrounding the Adani Group. Inside Adani, a Bloomberg exclusive, replays all weekend only on Bloomberg.
Welcome back to The Close. I'm Scarlett Fu.
And I'm still Romaine Bostic here, and we are still here despite the Labor Day holiday has already kicked off. And, well, it might be a good holiday for some investors because you saw some pretty sizable gains on the day. The chart behind me, those are your monthly numbers here. You're looking at S&P 500 that was up more than 2%, and I put the equal weight S&P 500, and I did it for a reason. Second straight month where we've seen outperformance of that broader equal weight index relative to that cap-weighted index. Now, it was a modest outperformance, just a fraction of a percentage point here, but that is the breadth that a lot of people were asking about earlier this year. Well, we're finally getting it here in the summer months. We should point out the best performing sector this month, well, it wasn't tech, it was consumer staples, it was real estate, it was financials, it was utilities, and that's been the trend for the last 2 months now. Tech is much lower on that leaderboard, and once again, that might be a good thing. If you are a bond investor on a total return basis, you made money in the month, 2.81%, at least on an aggregate basis here. And if you are in the commodity space, still some concerns there. Crude oil down on the day, the week, and the month by about 1.5%.
I want to zero in on the tech sector here because when you look at what happened over the course of a month, Super Microcomputer was the worst performer in the S&P 500 in the month of August, down almost 40%. For today, it closed down about 2.5%. And there's a whole number of catalysts here driving this company lower. Allegations of accounting problems by Hindenburg Research. There's also disappointing earnings report and a delayed 10K filing, which Supermicro blamed on needing more time to assess its internal controls. So all of that adding up to a big, big drop for Supermicro. In terms of the other gainers on the day, Intel has had a rough go of it, we know, for the last couple of months, but on the day, it did close up 9.5%. This is after Bloomberg News reported that the U.S. chipmaker is discussing various scenarios, including a split of its business between manufacturing and product design. And of course, the hope here is that it can get itself back on track and kind of restore some of its former glory. Marvell Technology gaining more than 9% on the day after the chip device company's second quarter results beat estimates, and its third quarter outlook for revenue looks pretty strong. There's a lot of hope as a result that perhaps its AI-related applications will fuel growth moving forward. But when you bring it all together, our top story this hour, and on this day really, is a record-breaking day and a record-breaking summer when it comes to air travel. According to the TSA, the Friday before the last long weekend of the summer, which is today, will be the busiest, with more than 17 million people walking through security checkpoints across domestic airports. Yet, spare a thought for those conducting the screenings and serving passengers on flights. Bad behavior is actually getting worse. We're going to get into all of that, as well as the workarounds that travel pros are recommending later this hour.
Absolutely. But we do want to get back here to the markets. How they finished out the month of August and maybe potentially where they go in the month.